Good morning, NEARCON. The Layer 1 stage will begin in 10 minutes. Greetings and good morning, NEARCON. The Layer 1 stage will begin in 3 minutes at 11 a.m. Good morning, NEARCON. The Layer 1 stage is about to begin. Please welcome your MC with Near Foundation, David Morrison. Stinger again.
Woo! Did anybody go to a party last night? Well, if you did, you're probably not here. Look, thank you so much for battling through the past 2 incredible days of NEARCON. We've got 1 day left, and then you're free to party and enjoy Lisbon. We've got a wonderful pre-recorded panel right now entitled USDC Rising, a fireside chat with Circle. We have Marieke Flament, who you all know and love from the Near Foundation, and Jeremy Allaire from Circle. So let's give it up.
Hello, Jeremy. Such a pleasure to be here with you today. Thank you so much for taking the time, and great to have the opportunity to chat with you. We've worked together for many years. I actually owe you my first job in crypto, for which I'm still, extremely grateful to you. So it's really inspiring to see how much progress you've made with Circle, while keeping at heart the same mission and the same vision. And something actually I think is quite remarkable is if we look at USDC right now, it seems not to be so far off from its all-time high in terms of market cap. So that seems pretty good given that we are supposedly in a crypto winter. What do you see as being like the demand for USDC right now? Who's buying it? And what are the biggest use cases that you're seeing?
Yeah, well, first of all, it's great to be here and great to be able to participate in NEARCON, and great to see you again. And I'm really happy to do this. Yeah, I mean, it's a really interesting time. I think with USDC specifically, and then more broadly, obviously, there's a lot going on. But I think USDC has benefited from I think more and more people around the world who are focused on having access to a safe, trusted, transparent, reliable dollar digital currency. And I think the framework that we set out to launch USDC with which was really anchored in that kind of, this is issued by a regulated financial institution. It has, major regulated players around it, like Coinbase. It, it is something that's always had kind of real world banking integration and real liquidity and a lot of transparency. All these things have helped it grow and have grown the use cases for it. But that's in times of good and in times of bad. And so one of the things that we've historically seen is that you've seen a lot of growth in USDC when there's more and more activity happening in the crypto economy and expansion of projects and more and more applications and markets and so on. But then also when there's a crypto winter or when things are challenging, there's a kind of flight to safety. And so we certainly saw that since November of last year. We've seen a significant amount of market share gains for USDC during that time. Now, what's interesting from my perspective, and we really started seeing this a couple of years ago, but it's only grown, is more and more people and institutions are realizing that this is a very convenient kind of medium of exchange. It's a very convenient kind of form factor, as I like to say, for a dollar. It has the capabilities of public blockchains, of which is a high degree of security and privacy assurances and very low cost transmission. And so we're seeing a lot of growth in demand for using USDC around the world, in emerging markets, as an international payment and settlement method. We see thousands of companies who are using this because they have people who either want to pay them or they want to pay in different parts of the world. And so, we wanted to, see something that was used as a kind of everyday working capital for more and more, more and more both households and firms. And we're starting to see that and starting to see those use cases really grow.
That's amazing. And it seems that really the key driver of what you described also mainly for payments, actually. And we do see that for payments, stablecoins are indeed in particular perfect as a use case. I think there was even a tweet saying that 50% of Stripe payments could be coming and settled with USDC in 10 years, which, would be absolutely fantastic to see. But where do you see actually future trends in the next decade for stablecoins in particular? What are the trends according to you?
Well, it's interesting. It would be sort of like asking, in I don't know, say 2007 or 2008, what are going to be the trends in mobile apps in the next 10 years? And you could predict a lot of things, but you couldn't actually predict all of the innovation that was going to happen. We had just started to see kind of product market fit with the iPhone. 3G happened at least broadly around 2008. And the capabilities of that technology opened up developer creativity on a massive scale, and millions of developers invented all kinds of things which have changed our lives and improved so many different things. And I think about kind of programmable money on the internet the same way. It's taken us almost 10 years. I'm 9 years into Circle now, but almost 10 years to get to the point where we actually have a representation of fiat as a cryptocurrency, as a digital currency, and you have blockchains that are finally getting to a point where you have high throughput, efficiency, security. You're really starting to see the infrastructure layer get to a point where, wow, developers really can build compelling apps. And now we have this material to work with. You've got the programmable programmable dollars or euros or what have you, and you have these kind of new operating systems in a sense that people can build with, and so whenever I get asked that, what do I think is going to happen in 10 years, I'm sort of like, I have no idea, and that's actually a good thing if I really knew. But I guess the uber point is that when you have a situation where you effectively are taking the cost out of transacting and you're making the reach of value and value exchanges the reach of the internet, you will see exponential growth. And so the not just exponential, but very significant. So the way I often talk about it is, when the movement of text-based information or asynchronous text information kind of moved to widely available devices on the internet, the amount of textual information that was published in the world like went up like 1,000,000x or gazillions, right? And as open protocols for audio and video communications peer-to-peer got reliable, and we had mobile broadband and so on, like the amount of like voice and video communication just went up exponentially. And again, when you have money as a native data type of the internet, and you have kind of internet scale blockchains, like the amount of value exchange, I think, is going to go up just extraordinarily large, and there'll be, I mean, use cases that get built that we haven't thought of yet. And so I'm particularly excited about the ways in which money and commerce and labor and like the essence of what it is to operate as a firm can work. I think there's a huge amount of reinvention that's possible in that. And historically we think of that as like, well, there's trade finance and there's cross-border payments and blah 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 blah. I don't even think of it in those terms. I just think like, think about like what an Alibaba or an Amazon marketplace did for the coordination of people who have things that they want to sell and people who want to buy them, and just these mass like new kinds of platforms. Just think about marketplaces for capital and the long tail possibilities of that, and really what could become possible in terms of how credit and money serve people who are operating businesses over the internet. So this maybe ties back to the Stripe comment, which is, they talk about growing the GDP of the internet, which it kind of resonates with me. I really think that if you really want to grow the GDP of the internet, you need the internet economy to actually be natively powered by digital assets and digital currency.
Yeah. Fascinating. And I think actually if we talk more about digital assets and maybe coming back closer to stablecoin and how banks and central banks around the globe are thinking about things, one big debate, at least it feels like that at the moment, is differences between stablecoins and CBDC. And I'm just curious to hear how you think about that, right? Because in your role also at Circle, you interact quite a lot with governments, and how governments are pushing basically the paradigm shift that you're talking about. So do you think there is space for both, or what does the future on that side look like for you?
Yeah, I mean, I'm a practitioner, and I think I'm very focused on what can we do, what problems can we solve today, and how do we do that like in the market with customers, with users, with developers today. And I think that's the approach that we've taken really since inception. And I think the other kind of fundamental approach is really trying to build on this idea of the public internet and public internet infrastructure, open source layer one blockchains, open protocols that are open source, and that's the vision of the future that I want to see. I want to see an open internet of value exchange. I want to see programmable, composable infrastructure. I want to see rapid iteration that enables anyone anywhere to kind of put these pieces together. And so it's a vision of money and of the financial and economic system that looks a lot more like the software powered internet. Mm-hmm. And I think that's we're not alone in that, right? I mean, I think so many people who are in this industry and who work in the crypto space and the blockchain space share a lot of those fundamental ideas. And there's lots of us around the world doing that. And so I view that as the inertia, the amount of kind of fundamental force that exists in the blockchain ecosystem from engineers and computer scientists and economists and lawyers and academics and business people and product people and so on in every country, everywhere in the world that are building this kind of money movement, as I like to say. Building this is extraordinary. And when I look at that, and I think stablecoins are a really strategic and key piece of that, and I think more regulation is a good thing around us, especially around things that are representing that they are a kind of cash equivalent instrument, right? But when I look at all that together, and then I say, oh, some government's gonna, in some countries, gonna like hire Accenture and like set up some closed loop e-money system and call it a digital currency. I'm like, whatever. Like it just, I don't know that really represents much of anything. And so I'm highly skeptical of that, that track. And so kind of coming back, I mean, who knows, right? Things can happen, people build things, but I'm always going to take a bet on the open internet and what the open internet is delivering and open software is delivering. And I'll take that bet all day long. And it's not, I don't want to paint the world as a kind of unidimensional where there's only one thing that can happen. Like clearly there could be many things that happen. I mean, in China, like I think there's some people who might use the eCNY to pay for bus tickets, but most people are quite happy to use Alipay and Tencent and WeChat Pay. And those are like the dominant methods of electronic money. The government would like there to be a third way or a government available way so that they limit private power. And so there's sort of a battle between these big, powerful private companies and the government over that. And who knows how that'll play out. But I don't think that's necessarily something that we in the West should be modeling ourselves on. And I think, the values of open innovation, open intellectual property, privacy, security, innovation, all of these are the values that I think should be driving us. And that I think leads us to really believe that, sort of stable coins and public chains and similar kind of integrated infrastructure will probably be what is most widely used in the coming years.
And can I actually bounce on that? So you talk a lot about the open internet and this view that actually it's basically inclusive and anyone anywhere can participate on that. And at the same time, you've also mentioned like the need for regulation, in particular when it's things that are very close to cash. How do you reconcile centralization, decentralization, and the paradigm that we're starting to see between both worlds?
Yeah. So, I mean, again, like there's a spectrum here, and I'm not like a maximalist on any one of the vectors on that. Like I think that things exist on that spectrum, and it's important that things exist on all parts of that spectrum. There may be people who are very anchored on one, which is like completely, totally decentralized money that is completely, theoretically at least free of government interference, and or has a non-sovereign monetary policy, like Bitcoin is as an example of that. And I think there's a very compelling use case for that. On the other end, right, you can have like tightly controlled, completely locked down, government-run, government-surveilled infrastructure, like the Chinese project, as I was just talking about. So I think my view has always been that at least for the next, let's call it, 20 years, 10 or 20 years, something like that, it's really important that we have a very strong hybrid model. And this is something that we've talked about really for about 9 years, is this kind of hybrid digital currency model where you can take an existing currency, like a dollar or a euro, and express it in a cryptocurrency form and give it all of the capabilities of those public networks and platforms, but have deep interoperability with the existing financial system, so that literally like it's asset referenced and it's referencing the actual cash or cash equivalent instrument, so that people can utilize that with the superpowers of the internet. And I think that's really powerful. And I think that you can do that in a way which does have regulation around it. And I think, again, if we want to like connect this in the real world economy and real world finance, and we want households everywhere and firms everywhere and even other financial institutions around the world to sort of build on this and use this, you have to have that kind of assurance, and you need to have legal and regulatory kind of frameworks around it, or that's not going to happen. But I think over time you can definitely see a migration towards the use of non-sovereign digital currencies, and I am a long-term believer in that. But I think right now, I think we'll see kind of these major reserve currencies get kind of connected up to public blockchains through private sector innovation, open source innovation, open ecosystem innovation. And that'll unlock a lot. I think that can unlock a huge amount of value for the internet economy, for the real economy, et cetera. Yeah.
So it's a really hybrid model, and this idea that we're in a transition, so to approach things also with pragmatism while it's like a longer road on which we're getting. One thing actually, and if I change tact a little bit, so the theme at NEARCON is actually building beyond the hype. And you've been several very successful companies. And more importantly, actually, you've survived, and not even survived the bear market, you've actually thrived in a bear market. And I just wondered, if you have any tips for, all the people who are going to attend actually NEARCON and who are here to learn, right? What would you say? And actually, what does building beyond the hype mean to you? And what tips would you have into actually building and continuously building during a crypto winter?
Yeah, well, it's so interesting. And I'm going to repeat some things that are I think, said somewhat often, which is, now's a great time to be building. And I think that just to unpack that a little bit, I think when you're in an environment which is like super overhyped and where there's just insane amounts of money that are flying around, there's a lot of things that can get that can kind of get developed and pushed, which don't really have much substance behind them, and it gets really noisy, and it's really hard to know, what's real, what's not. And it also, for a founder or for builders, you second guess yourself like all the time, like, oh my God, look at all this over here, and what are we gonna do? And like these hype cycles are out of control, and like you just start trying to like adapt to whatever meme is out there, and I think that's like an awful place to be as a founder. And I think right now is actually a really special time because unlike the last I should say crypto winter, there were a lot of amazing things born out of that, right? DeFi was born out of that, broadly speaking. I remember we launched USDC right into the heart of the crypto winter in the late fall of 2018. And like we were working with Compound and Aave and all of the early DeFi projects, Maker, but now like the infrastructure is so much better, right? You've got third generation blockchains like Near, and you've got like consumer apps. You've got a lot more clarity legally around the world. Like there's so much like way better environment now. And so now, you can be focused. You can focus on, building things that have like real utility. And so I feel like it's an excellent time in terms of the materials that we have to work with, the best we've ever had so far. And I think kind of getting rid of a lot of the noise and hype like helps people focus. So it can be a really excellent time for people to be building.
Wonderful. Well, I think that's fantastic. I know time is up, but I cannot let you go without asking, because we do share a lot of the vision you've described actually for the future of the world. So my last question, and feel free to not answer, but when will we see USDC be near native?
That's a great question. Well, what I can say is, we're really impressed with Near and with what the community has been building and evolving. And I think I talk a lot about third generation blockchains and use Near as an example. So we're excited about the progress that's been made, and we continue to bring USDC to more chains, and we'll see what happens there.
Wonderful. Well, Jeremy, thank you so much for joining us. This has been, as always, inspiring, thought-provoking, and looking forward to continue following your progress and hopefully working soon together.
Thank you, Marieke. Have a great conference, everyone.
Thank you.
Wow, what a brilliant piece, right? I'm feeling the energy is a little bit low, which is understandable because I'm hungover too. But We have an incredible panel next. They're going to impact some really, really big ideas about the stablecoin trade-off. Is it decentralization versus mass adoption? We've got Marc Sugden from Decentral Bank, Joao Reginatto from Circle, and the wonderful moderator, Emily Parker.
Hi, everyone. Welcome. So yeah, more stablecoins. This is obviously a very timely topic right now with South Korean officials looking to arrest Do Kwon, which we can talk about briefly. But basically what we're going to get into on this panel is just some of the philosophies behind stablecoins, centralized versus decentralized, and also touch a little bit on central bank digital currencies that are issued by governments. But why don't we just quickly start, super quick intro. We obviously just had Circle, but we can just quickly recap for some of those who aren't there. If you guys just give like a super brief description of your project, what you're doing, and then we'll take it from there. And also how you would characterize your stablecoin. Would you characterize your stablecoin as centralized or decentralized, since that is the theme of this panel? Why don't you start here?
Cool, thanks. So the clue's in the name, Decentral Bank. So we are building out a decentralized stablecoin protocol. I help with product partnerships, commercial development, business development, those kind of things. Really trying to build out a product that lots of people that are underbanked can utilize in a decentralized environment and have the confidence and security of operating outside traditional spheres of influence.
Thank you. Joao, how would you characterize Circle? Would you guys call, well, let's just simplify this. Would you guys call yourself a centralized stablecoin? Do you think that's a fair assessment?
Hey, Emily. Hey, everyone. Thanks for having me over the video. So I lead the stablecoin product teams for Circle. As you guys have seen from Jeremy, I don't think we need an explanation further than that, but we issued 2 stablecoins today, USDC, which is the 2nd largest dollar-backed stablecoin in the world, and NEARCON, which is the 3rd largest already euro-backed stablecoin in the world. And all of our stablecoins, they follow the same principle, they follow the same design. I led the build out of USDC for Circle back in 2017-18. And the design that we chose back then is still the design that we believe is foundational for ecosystem for there to exist. And it's definitely a design that involves an element of centralization. I mean, we use a mechanism that involves off-chain collateral. We opt for this very simple mechanism that for the issuance of every token on chain requires one equivalent amount of fiat money on a reserve, and the management of the reserve requires licensing in most jurisdictions around the world. It's usually qualified in a very known way, and it requires an entity to manage that reserve, right? And so that element of the design has no way to be decentralized.
Got it. And I'm just curious if you have any thoughts on that. I mean, obviously you created this, or well, you are part of this project that has decentralization in the name. I mean, what do you think about the concept of centralized stablecoins? Do you think that they're problematic in any way? Because clearly you are positioning yourself against those.
I don't think it's problematic per se. I think it's using digital assets to increase the velocity of capital throughout the world, which Circle are doing expertly. But they're simply doing the same thing that people have always done, just using new technology. Mm-hmm. So it's disruptive from a technology point of view, sure, but is it disruptive from a inclusivity or governance point of view, enabling people to get involved in the governance of treasuries and all those kind of details, and enabling transaction of those funds and the movement of value in other places where it's perhaps been quite difficult in the past to operate in the main currencies that people usually spend.
I don't know if you have any response to that. I mean, that's sort of a little bit of a critique of the centralized model of stablecoins, which is basically like it's kind of the old system by a different name. You know, that's something that you hear a lot. I don't know how you would respond to that.
No, I don't think that is antagonistic to the vision that we have for the world, right? We actually have always been super interested in decentralized designs, algorithmic designs. We just haven't found a design or a particular solution for a lot of the challenges that exist in that space. But more fundamentally, I think we have always believed, and this has been on the journey that we have had as a company way back in the day from 2013, 2014, we were always as a company looking for a better substrate to build new financial services on top of blockchain technology. And we attempted to do that over Bitcoin. I mean, we had a peer-to-peer payments product that operated across many jurisdictions, and it used Bitcoin for settlement. That clearly didn't work over time. Bitcoin is not suited for that kind of use case. We attempted solutions like building our own settlement token over the Ethereum blockchain when Ethereum emerged. And then we just realized for ourselves that I think what the world needs at this stage with the technology that we have, with the promise of the technology that we have, is the ability to really digitize fiat money, right? There's a tremendous opportunity in doing that. So I don't discount that evolution. I agree, it's more of an evolutionary model, but I think there's so much that developers can do when you digitize the concept of fiat money and have it all of a sudden cross borders super easily, be programmatic, be composable. So I think there's a phenomenal amount of innovation that can come from the existence of these centralized models with all the limitations that they have, for sure.
Okay, so I want to kind of zoom out a little bit from like your two projects and just talk about the larger stablecoin landscape, because it's become such a hot topic. And I think in the United States, for example, probably the first comprehensive regulations we see will probably be in the stablecoin area. I think a lot of people feel that stablecoins are the next shoe to drop. If like there's another crypto crisis, it would probably be started by a stablecoin. Let's just say one major stablecoin that we don't need, can remain nameless out here. I think a lot of people are concerned about the collapse of another stablecoin. So let's start with UST, for example, since that's in the news. We have Do Kwon now, he's looking to be arrested. I'm curious what you guys think, like what exactly went wrong with UST? What was the problem there? I mean, do you think it was, Do Kwon himself? Was it the technology? I mean, is there a model out there for an algorithmic stablecoin that could succeed? Because algorithmic stablecoins, like nobody really knows how to regulate them. Nobody really knows what to do with them. So I'm curious, like, what you see as what went wrong there, because people were really excited about that until it collapsed. And yeah, let's start with you.
I think it's a combination of Do Kwon putting a target on his back by being so vocal. He basically challenged the SEC and the likes of that to go after him. People want to cut a tall poppy down. He was obviously quite successful, making a lot of money quickly, and maybe the man who flew too close to the sun a little bit. He came crashing down very quickly. So a combination of that, as well as their phenomenal growth, right? The timing of, I guess, the crypto bull market and the model of Luna and Terra, where you've got this asset with no inflation schedule that you keep on buying and you burn it to mint a stable coin. It's just the cycle of the Ponzi keeps on going, right? And as far as we're concerned around creating a decentralized stablecoin, I mean, without being too cynical, it happened at the perfect time for us because we were kind of looking at an algorithmic model to start off with. But Terra, fortunately for us, unfortunately for a lot of people, created the perfect playbook of what not to do. These are the traps you need to avoid. Grow slowly, organically, make sure that you have those treasury management processes in place. So when it comes time to redeem that stablecoin, your users will always be able to be made whole. That's the most important thing, right? If you are using any asset, they need to have the confidence and security that they'll be able to redeem it for a dollar value later down the line, right? So a combination of them growing too fast, Do Kwon going, and we are so early. It's a meme, but we're so early, and I would never ever say that an algorithmic stablecoin won't work, because the people here today and within our industry as a whole are extremely intelligent, and we're constantly innovating, changing things, working out models. Frax have quite a good model. They're algorithmic. They're kind of close to getting there with user security. So I would never ever discount the long-term success of algorithmic stablecoins, but it's an iterative journey, right?
Yeah, I mean, I think the UST thing was interesting because it was like people thought it was the most brilliant idea in the world until it just wasn't, you know, and it just sort of collapsed. And I think what your point about, you know, Do Kwon flying too close to the sun, there's definitely an element of that in terms of like now him being in the crosshairs of authorities, but that doesn't quite explain the sort of like technological meltdown and financial meltdown. So I don't know, Joao, I'm curious what you think. I mean, what went wrong with UST? It's obviously easier to say in hindsight, but, you know, and also like, was it even decentralized? I think that's a controversial point, right? I mean, they presented themselves as a decentralized stablecoin, but like, was it? It was, you know, I mean, is that even a fair assessment?
Yeah, there are several things to unpack there. I don't believe it was completely decentralized. I think there were several elements of their model that were completely centralized, right? But I think to stick to some of the things that you said from a technological point of view, and I agree with what was said earlier. I think part of the problem was the environment that was created around UST and how aggressive it was. I mean, quite frankly, I am somebody, you know, who lives in crypto. I live on Twitter. I emit some of my opinions over there. People like me, I was afraid of emitting my opinions on UST and on Terra on Twitter because people were actually harassing anyone who had any opinion against it, right? And I'll be frank, internally at Circle, we have very smart people, just as with a lot of other companies in this space. There was a lot of people who were calling this way before it happened. Because from a technology point of view, the solution had this idea of this endogenous relationship between the dollar token and the native token, right? And there are problems with that solution. Like it's quite obvious when you model it out. It can work on a bull run. It can work when there is demand for the native token. But all you need to do is to think about, oh, what if all of a sudden there is zero demand for the native token? And a lot of people would be, as I said, aggressive and challenge that idea and say there will never be zero demand for the native token. Well, guess what? We all learned that it can happen, and when it happens, then the solution unwounded like pretty fantastically in a matter of hours, right? So I think that solution does not work, and it has to have different elements of that solution for that pair of endogenous tokens to work, because otherwise they work on the spiral way up. And they have an ability to have a velocity of growth that is quite tremendous, and that was phenomenal to see how Do executed and the team executed on that. But it can be just as has the same tremendous amount of speed on the way down. And so, from a technology point of view, there was a clear flaw on that design. I think a lot of people called that out. Nick Carter, you know, several people called it out, that design flaw, but they were aggressively challenged, right? And that is something that I think we as an ecosystem need to make sure that doesn't happen again, because it's not in the interest of anyone. We tend to work on technologies that are built in public, as we say, right? Everybody can see all the details of most things that we do. If people are criticizing designs, I think people should be more open to listening.
I love that you brought up that point. I think that's such an important point. It was such a key problem with UST, and I'm not totally sure that the crypto world has learned the lesson. You know, basically, you're right. There were people very early on putting out warning signs, raising red flags, and they got attacked on social media, and then followers would pile on. And, you know, the reason why this is dangerous is that it definitely dampened debate, you know, and I don't think this is unique to UST. I think this happens in crypto quite a lot, and I think it's really critical that, you know, the industry does something about this, because otherwise the regulators are just going to come in and sort it out, right? If we can't, to some degree, like police ourselves and have like an open conversation, because you're right, people are getting shouted down, not even just for criticizing UST, but for just raising questions about UST, you know? So I'm really glad you brought up that point, because I'm not sure people have learned that lesson. I want to sort of get into the other sort of elephant in the room, which is Tether. Tether is also, you know, pretty controversial. I think that there are some people out there that feel that Tether will be the next domino to fall. You know, there's controversy around, you know, how transparent Tether is, and just because Tether is so dominant, you know, were something to go wrong in Tether, it would just have such a ripple effect throughout the entire crypto world. So I'm curious, like, what you guys think about that. I mean, should we be worried about Tether? Because some people definitely are, and I'm curious if you are. Do you want to start?
Yeah, I'll go. Absolutely not. No worry from our point of view when it comes to Tether. they handled was about 4 billion in redemptions in the space of 5-6 days when the market went down. And there's not a TradFi institute in the world that could handle that many redemptions in that short amount of time without closing their doors and creating a systemic-wide financial issue. So there's always going to be people that speculate about their treasury and reserve funds and whether they're wise to hold commercial papers and all those kind of things. I think they're making moves to be a bit more transparent because, like you mentioned earlier, the US and other markets are seriously looking at stablecoin regulations, and that transparency and the ability to be audited and show those details are absolutely going to be paramount for being able to continue to using these assets to transfer value. But I think there are elements within the industry that take advantage of the unregulated markets, maybe take very public short positions, perpetuate the FUD, and maybe take a silent spot position because it always bounces back. Tether always bounces back. Why is that? I think because they're a very solid project, so very solid team with a lot of people that trust it and use it.
Joe, what's your thought? And also, obviously people in the crypto world know the difference between USDC and USDT, but I don't know if the outside world really does, right? These are just two, big stable coins that have the same 3 letters, in their name. How do you guys, what is your comparative advantage? How do you distinguish yourselves from Tether?
Yeah, I think it's in several ways, right? I think we have always imagined that a product like this, if it's dealing with the dollar, then it needs to be based out of the US and it needs to be regulated out of the US as an instrument, right? And we have never even considered the option of following a different path because I think that is at risk in and of itself, right? If you choose to arbitrate jurisdictions or gray areas or regulation, eventually it catches up to you. I think it's an opportunity that a lot of people have explored in crypto, but I think eventually it will catch up with all of us. So we have always opted for this model where we issue a digital dollar asset. We should do that with regulated banking partners out of the US, and we should do that in a way that's regulated in conjunction with how several different regulators in the US would understand. And that's the way that we have constructed USDC, and that's the way that we'll continue to construct all of our other assets. I think but that's not necessarily a differentiator, right? I think that's more table stakes as how we see it. The differentiation, I think, on our side is then how we look at the risk of an asset like this and how we look at the quality properties, right? And I think, yeah, it's interesting. Tether, did actually redeem all of that money when there was that bottom part of the bear market when USD collapsed. But just for comparison, right? We invariably redeem $4 to $5 billion of USDC every week. It's no news for us. In 2021, we redeemed north of $60 billion worth of redemptions for our customers. I mean, it's not news. We don't blow this number up because it's by the way what this asset should do, right? I think it's surprising that people use that as a selling point for a stablecoin. Guess what? It should be redeemable. If it's not redeemable, there's a massive question mark around that. But the other thing that I think we have that I think is quite different is just the system and the level of technology that we have implemented around a system like that. I mean, USDC is not controlled by anybody who pulls the private keys out of cold storage to issue and redeem the asset. I mean, USDC is managed by systems, by software. The issuance of USDC runs on a 24/7 basis. We issue hundreds of millions of dollars for some of our larger customers during the weekend. It all completes in a matter of minutes. And we have extensive teams, building out these systems, working with banking partners, optimizing our reserves, managing the risk with our regulators. We have hundreds of people working on USDC. And I think it takes that amount and that size of a village to construct and to manage an asset like this. It's surprising to me that people don't see the risk when that is not the case.
So you're very diplomatic, but just sort of getting to some real talk here. Should we be worried about Tether?
No, I don't think so. I agree with that, though. I don't see any particular reason today for anything that is about to happen. No, I don't think so. I think Tether did a tremendous job in being the first mover I think the amount of adoption for Tether in Asia in particular, with real use cases, right? They have a tremendous amount of command over the crypto capital market, particularly in Asia. But people prefer Tether in a lot of these jurisdictions as a flight to safety, and I don't think that changes. That consumer preference doesn't change very easily. So I wouldn't make it like any doomsday prediction. I don't think there's anything bad about to happen. I just think our model is better, and over time we will win.
Okay, cool. So the panel agrees here not to worry about Tether for now. That's good. Can all sleep better tonight. But let's just move quickly to central bank digital currencies, which are sort of stable coins, I guess. I mean, I'm sure most of you are familiar, but central bank digital currencies are essentially stable coins that are issued by governments. They have the word central in the name. There's nothing decentralized about them. China is kind of leading the pack in this, but there's, dozens of countries now actively exploring central bank digital currencies. We don't really know if and when they're going to arrive, but there is a possibility that we could eventually be in a CBDC world, largely because of FOMO, right? China started, then everybody else is jumping on, and we could end up in a world where most countries feel like if I don't have a central bank digital currency, I'm going to be left out. So it raises a lot of interesting questions like, can they coexist with stable coins? But I'm more curious, like from your perspective, putting the stable coin question aside for a moment, do you think central bank digital currencies should exist? Because I think there is a lot of controversy around them in the crypto world, just because they are somewhat antithetical to the concepts of crypto. I mean, crypto is supposed to be some sort of like alternative to government-issued money, and this is literally government-issued money. So I'm just curious what you think about the CBDC thing. Should they exist? Are they a net positive, net negative for the industry?
I think they're a net positive, ultimately, because you're going to get a population that's going to have to get familiar with transacting digitally online. But like you correctly said, we're in this, call it a revolution, that's been going on for a while, because central banks and their policies around money, supply, inflation, all those kind of details, has not been great. Their history of inflation in various different countries, the steps that people need to go to manage economies and their actual currencies, the way they interface with the rest of the world. That's why we're all here in this space, creating a new way to do this thing. And will the US dollar remain the #1 currency over the next medium to long term? Who knows? But I guess, like I said, it is absolutely necessary as a net positive to get people familiar with sort of using digital money in the art of the possible. And I think there is certainly reason, as long as central banks and regulators and institutions are happy with the coexistence, I think it's a really cool thing.
I think the counter argument to that, and it's not what I necessarily subscribe to, but I've heard, which is that, yes, that all makes sense, but couldn't stablecoins just do that, right? Like, why do we actually need the central banks to get involved? Because what you're describing, is sort of like hedging inflation, different, more getting people into the digital money economy. Like, yeah, why not just use what you guys are doing, right?
I agree.
Why do we need a government to do it?
Why wouldn't the US take Circle, for example, go, hey, we're just going to use you guys as our CDBC because Circle have been doing it together. And let me tell you right now, you don't want the US government or any other government go out there because it's going to take a task force, a committee, billions of taxpayer dollars to try and invent something that's already been invented and operates perfectly. So, yeah, conceptually, but I think they should certainly co-opt solutions that are out there at the moment.
Sure, what's your feeling? Like, why, you guys are out there, you're such a big market player, doing a lot of the same things that a central bank digital currency says they're going to do. Why do we still need a government in this space? Or do we? I don't know. I don't know what you think about it.
Yeah, it's a super interesting topic. I think we get asked that a lot. There's a couple of things I think it's worth mentioning. First of all, I think there is an opportunity for products like that to exist if they are just to optimize existing infrastructure. So, for example, there is an argument for CBDCs and the role that they can play, particularly in intrabank and across Fed in the United States, particularly kind of ecosystems, right? So the way that banks have accounts with the Fed, what if those accounts were actually in digital form, right? What if CBDCs play a role there? I think it would be tremendously more efficient, and there would be an opportunity for a lot of improvements to exist compared to what exists today. I am very skeptical, though, of what you said. I'm very skeptical of the role that government-issued CBDCs can play at a retail level. Again, I think people tremendously underestimate the complexity in operating a system like that. But also, as you rightly pointed out, we live in a world today where we are very, very comfortable with the idea of private money, right? I mean, private money, the idea of e-money, electronic money, that's regulated and well understood all over the world. And actually, the majority of the form factor of money that people utilize on a day-to-day basis, I mean, the Visas, the MasterCards, the PayPals, the prepaid cards, these are all private forms of money, right? And people don't have an issue with that. Governments don't have an issue with that. Regulators don't have an issue with that. Everything seems to work, right? So I don't think there is this idea. I don't think this idea is valid in terms of thinking, CBDCs, if and when they come at a retail level, all of a sudden they will compete dramatically with stablecoins. I don't think so. I think they will at most coexist, right? But in fact, the private sector historically has had an advantage when it comes to building products and innovating and iterating quickly in a way that governments just don't have the same incentives for, right? So I don't think, honestly, the competition at a retail level will be fair unless this is mandated, right? And then if it is mandated, if all of a sudden people, consumers, businesses need to use this for any sort of reason, then I think we enter like a danger and more Orwellian kind of world. And there are reasons why countries like China are more interested in this and moving faster than others, right? Because essentially money is control. Right. Companies like Circle, I think stablecoin issuers of any kind, and the ones that we were describing here, we take a very particular stance when it comes to the transactions that happen on assets and on the infrastructure that we build, right? We have a responsibility for reporting to regulators everything that is happening within these Circle constraints, the Circle boundaries, right? We don't go and check what Emily is doing on her self-custody wallet if she's using USDC. Is that and it requires a court order. I mean, if somebody's using illicit use of a Visa card, I mean, the FBI can go in and can ask Visa or subpoena Visa to kind of open up those transactions and look into that. That can happen to everybody who is regulated, but will a government not abuse, the control that it can have over money in those sorts of instruments? That is a question that I think we, as not then as issuers of stablecoin, but as consumers, as citizens, I think that's a question we should all be asking ourselves. Isn't that too much control for a government to have?
Yeah, I mean, I guess one sort of best case scenario is that actually CBDCs could lead to more crypto adoption just because it's going to be challenging for CBDCs to protect privacy, right? Because they are issued by governments, and it could lead people to search for alternatives, to get interested in digital money, but look for alternatives that are more privacy protecting and, relatively decentralized. But anyway, we only have 2 minutes, so I just want to turn to regulation for a moment. This is obviously really complicated to sum up in 2 minutes, but stablecoin regulation is very clearly coming. So just quickly, actually, rather than talk about what you guys think is the best stablecoin regulation, what is the worst case scenario for stablecoin regulation, right? Because sometimes when you get regulators in a room with a technology that they don't totally understand, things can kind of go off the rails, right? And Joe, I'm just curious, what do you think, what could go wrong? What could regulators do to regulate stablecoins that would just be a bad scene for stablecoins in general? Because I feel like we shouldn't count out that possibility.
I think.
Yeah.
I think overzealousness. I think.
Overzealous.
Yeah, go out there with a view for innovation. But I think any stablecoin issuer, decentralized or not, you just need to be transparent about what you're doing, right? Open the books, open the kimono, this is fine. And then in the long term, I think hopefully you should be okay with a regulator. Just don't come down with a heavy hand. Continue supporting innovation because it's great for your country, wherever you are, to have these really smart people building really cool products.
And Joao, specifically, what is there anything out there? Because there's like a huge menu of regulations out there. Like everyone, so many different people in Washington, for example, talking about stablecoin regulations. What, in your view, is something that we should just be concerned about in terms of, like you said, overzealousness, heavy, and specifically, what could regulators might do to like clamp down on stablecoins?
Yeah, I agree with that point. I think the narrowing of the models is something that's dangerous, and we all hope and we defend, in the policy work that we do in Washington and in other places, that it doesn't happen. So, there is the model that Circle and Tether and some others have used, right, of this idea of exogenous collateral that lives outside chain. That should not be the only model for stablecoin. So we actually have defended that. Things like, crypto collateral stablecoins should be allowed to exist. All these other forms of stablecoins should be allowed to exist. Maybe they need to be, bucketed in different ways, because there had been conversations that I think that would be a very, very poor outcome, that the only model for stablecoins is one model. I think that would be very bad, and we really hope that that doesn't happen. The other thing, as we said, the other thing is overzealous, this idea that, and you see some rumors of that, but I honestly don't think that's going to be the outcome. Oh, this can only work if you know the identity of all these wallet owners, right? This can only work in a closed loop ecosystem. There should be no support for self-custody wallets. Obviously, we disagree with that. Obviously, that's very, very problematic for how we see the world with crypto technology. So that's also the doomsday scenario. But again, in the work and in the collaboration that we do from a policy point of view, we don't believe that that's going to be the outcome.
Thank you guys so much. We're out of time. We could obviously talk about this all day, but really appreciate your insightful comments. And thank you, everybody, for coming.
Thanks, everyone.
Thank you.
Thank you so much to our wonderful panel, Joao, Marc, and Emily. I don't know if you've tried the pineapple yet. There should be tons out there, and it's extremely sweet, but it is not as sweet as the next panel that we have lined up for you today. We've got an incredible team on to talk about crypto natives versus fintechs for the future of payments. We've got Elena Shiltseva from Roketo, Ivan Ilin from NearPay, Jess Houlgrave from Checkout.com, and your wonderful host from the Ready Layer 1 podcast, Joe Spano.
Thank you. All right. So let's kind of jump into this. And I think we all can acknowledge that we're kind of in a down market here, and everything is economically is all over the place. But crypto payments has started to kind of show up in the zeitgeist a little bit more. Jess, can you kind of introduce kind of where you see that going as we're getting hopefully eventually out of this market?
Sure. So hi, everyone. I'm Jess Houlgrave, and I lead crypto strategy at Checkout.com. We're a global payments provider, and so we're really thinking about crypto in two ways. Number one, we're thinking about how we can provide the crypto ecosystem with access to payments. That's something that we've been doing since 2018. We process for a lot of exchanges, on and off ramps. And in that world, I think what we're seeing is this real evolution that people are realizing that payments is one of the key barriers to onboarding people to Web3, right? Like,
absolutely.
That's their first access point, whether they're buying an NFT or they're investing in a cryptocurrency or anything else. Mm-hmm. They really need to be able to do that in a seamless way. Everybody is very used to easy ways of paying with their debit card or their watch or whatever it is, and we want to try to recreate that for the crypto ecosystem so that onboarding is seamless. And I think that we're seeing great development in that space. Regulators are really understanding the challenges and what the business models are, and that frees us up as a payments company to innovate. On the second side, we work a lot with Web2 companies, right? We work with Netflix, with e-commerce companies, retail sites. And that's been the really interesting thing for me, certainly over the last little while. And talking of the downturn, what's been most amazing is that the level of interest hasn't dropped this time.
Sure.
In the last cycle, we were seeing, tons of excitement, and then as soon as crypto winter hit, all of these big companies said, okay, like, I'm out.
Right.
Not interested in this. And this time, my LinkedIn, my WhatsApp, my emails are still buzzing with all these Web2 companies saying, we know it's crypto winter, but we also have huge confidence now that it's coming back.
Right.
We really believe in the technology, and so how do we start to think about crypto? And that's kind of how we're thinking about bringing crypto to the Web2 world right now.
Yeah, well, that's great. Ivan just mentioned kind of the idea of debit cards, and so NearPay is getting into debit cards. So how does that transition happen as well, where you can start to integrate your crypto from there?
We see that there are a lot of people coming to crypto, but the crypto is still less than fiat money. So we focus on the small part between the crypto world and the fiat world, so people can go to crypto and to fiat both ways. We know that fiat money is still more convenient in the daily life than crypto. For example, some people still want to buy beer for fiat. Yeah. They come with euros. So we try to make crypto more convenient to use through the more through the things that people got used to. They got used to Visa cards, MasterCard cards, and other of that. So NearPay focuses on this. We create NearPay cards so the users can spend their Near and USN in their daily life using the Visa card. I would think that this is the thing that will boost using crypto in everyday life.
Yeah. I think so. We have a nice rounding of the end user type of setup here, right? Of the checkout process, debit card. So with Roketo, and you're doing more of payroll type of stuff, how does the crypto and international payroll, especially with crypto being so global, how does that all work?
Hi, it's Elena Shiltseva from Roketo. For us today, we see one of the main problems in payments in Web3 is adoption. So new businesses are striving to come to Web3, but they are used to Web2 experience. They are used to good interfaces, and also they are striving to manage all those payments in different blockchains, different currencies, different networks. So in Roketo business, our main goal is to provide the best experience for DAOs and Web3 businesses regarding all the payments, payrolls, grant allocation, airdrops, token allocation, and so on.
Yeah, no, that's great. So as crypto is so global, do you feel like that you're able to better solve the needs of businesses through using crypto as part of their payroll and things like that, to pay their employees?
Well, yeah, actually, crypto is very convenient to pay internationally, globally, because it's really censorless. So in many countries, there are lots of underbanked or unbanked people who wants to receive their salaries in crypto. So.
Sure.
And we have recently released our first version, our alpha version, and now we are onboarding our first users.
Oh, that's great. So Jess, pulling it back a little bit, you mentioned regulations and some of the challenges that are going on. Check out a little bit more traditional fintech and coming especially around all of the big banks and credit cards and everything else. How do you see that marriage of the two? Is that becoming a challenge of the traditional fintech pushing back on you guys trying to integrate the two?
So we've been around since 2012. We've been in crypto since 2018. And when we started getting into crypto, we did it because we had crypto exchanges coming to us saying, I want to be able to accept fiat payments, and I'm struggling with my existing payment provider.
Sure.
So we, because we're a kind of payment service provider, we own the full stack of our technology, but we're heavily reliant on partners. We're principal members with Visa, MasterCard, all these schemes. We're reliant on acquiring banks. And it took us a very long time, actually, to work with those partners to get them comfortable. And we saw that as an amazing investment because we developed a lot of in-house expertise. We hired a lot of crypto native people and taught them about payments, as well as taught payments people about crypto. So we developed this core of expertise that we actually then used to go to our partners and bring them up the curve.
Sure, sure.
We did that in the banking space, with the schemes, but also with regulators and policymakers. And we have a huge program at Checkout to really interact with those people. And to bring a perspective, which is that, like, we're not only about crypto. We're not here to push a particular cryptocurrency or anything else. What we're here to do is to see that crypto, from a technology perspective, is the future of payments, and that smart regulators and regulators around the world now realize that they ought to have a competitive mandate, even if that's not explicit, because companies can choose where they want to go and set up. And so the smartest regulators out there are now really deeply engaged with, like, how do we create the balance of consumer protections, but also enable innovation. And that's something that we've been deeply focused on. And I'm, like, more optimistic than ever, actually, about the work that's happening there and the way that regulators and partners are thinking about it, because I think it's really going to help drive adoption.
Absolutely. So, Ivan, you must be experiencing some of the same challenges of both regulations, but also probably adoption. What are some of the things that you're dealing with from a challenge standpoint?
Well, I think that the main challenges right now are that regulations are getting more and more strict, and they're different in different countries. We face that, for example, Europe has implemented those AML directives that make it more strict, the money transfers. And we see that each country in Asia, in US, in Europe, they have different approaches to, regulation of crypto, regulation of fiat, and this is what we're facing. But I think that the main problem here is that we as crypto users, we expect that everything will be private, everything will be under custody, everything will be not out of control. And I think that crypto will be decentralized, but it will be more regulated. We have to do this just to make crypto more mass adopted. So this is the only way, and so we follow the rules. We have to follow the rules to make our NearPay card work everywhere. So this is what we understand that this is a challenge, but this is the only way to bring crypto to 1 billion users.
Yeah, absolutely. So, and this is maybe for everybody, where do you see, I guess, and you both are building directly on Near specifically, where do you see that specific blockchains either helping or making it harder for you? Like, why did you choose Near to build on?
Well, as far as we know, Ethereum was a good solution, but it is not as good, as scalable, as fast, and as well built as modern people and users require. So I think the Near is a very good solution also in case of usability, because there's human readable addresses, by the way. It helps a lot for the adoption. So it's fast, it's cheap, and it's much more scalable and usable, basically.
Yeah, I have kind of the same question. Why Near?
Well, I think that Near has a combination of the crucial factors that needs to be in an ecosystem. The first thing is the technology, sharding, and fast and cheap transactions. That's the first part. But that's not everything.
Right.
One won't do anything. The second thing is the ecosystem. The ecosystem is big. You can see many projects here creating real value for users. Sometimes it's like entertainment. And through entertainment, they bring new users. For example, Sweatcoin, many gaming projects here, they create something on Near, bring in new projects. And so the ecosystem is the second driver.
Yeah.
And the third driver, I think, that's the finance policy. So Near Foundation helps builders create, it helps entrepreneurs create, and that means that the ecosystem will rise, it will attract more customers, that is also crucial. Without customers, without real users, everything will die in a year. So I believe that Near will rise. It will grow as it grew yesterday. Yes, the previous time, yeah. So this is why we build a Near, because it has all the factors of future growth.
Yeah. I know there's something specific about Near, but just in general, you know, as you work with different chains, are you seeing different challenges as you try to integrate different on and off ramps for different crypto chains?
Definitely. I think that you know, some of the key things that I'm thinking about when I think about like the future of payments is the fact that our payment networks today, Swift, Visa, MasterCard, are incredibly scalable. They're incredibly efficient, and they have been built over time, and they're not very nice to develop on, but they've been built over time to create really efficient user experiences too. Right. What users expect from those crypto rails, you know, those traditional payment rails, is really easy ways to manage refunds and chargebacks. It's the right levels of consumer protection. It's the right fraud systems that that allow people to purchase safely and not get scammed. Right. And so there's a whole multitude of different factors that go in when you're thinking about building a blockchain that's suitable to actually be used for payment rails. Sure. So I think that what Near is doing in terms of, as Ivan said, around scalability, I think is really crucial. I think the environmental concern is a very, very real one for the ecosystem, and even post-merge, you know, the Ethereum blockchain is going to still be, you know, somewhere near like 100 times less efficient than the Visa network. Right. So there are still some real challenges even with these blockchains that have got a lot more adoption, and so that's why I'm kind of optimistic about chains like Near that are thinking about that in first principles. They're like very embedded in how the protocol's been designed. So I think that's really crucial. And then I think the other thing, as Ivan says, is like from a payments ecosystem, like payments is a two-sided thing, right? You need people who want to accept a cryptocurrency, and you need people who want to spend with it. And I think what the foundation is doing at Near is investing very well holistically across the ecosystem. They're thinking about all the different components that are going to be needed, whether that's around payments, around different user interfaces, applications. And I think that is what's going to drive that growth. Certainly, I think in other ecosystems, you see very heavy focus on, say, the application side, but like the tools and the infrastructure that people need if this is really going to come true as a payments sort of rail, maybe isn't there.
Sure. So this is kind of for anyone, just thinking about like what we've got into so far. What do you see, I think, is going to be the next step for payments with crypto? Is it just continuing to battle regulation, or is there something else on the horizon here? Anyone wants to go first?
Let me answer. Yeah, I think that it won't be a step. It will be like a growth that is dependent on the network effect. The more people use crypto, the more people accept crypto, the more it is valuable for new people coming into crypto from the merchants and from the people. So it will be like, you know, exponential growth, I think. And what we need is funding. We need good news. We need less fails, like Celsius, Tornado Cash, and something else. We need more fails. We need more, you know, sustainable actions on making crypto, you know, ubiquitous.
Yeah. How about for you, Elena?
Yeah, absolutely. I totally agree, because it will not be like some big step. It will be sustainable growth. The more good products we build here, the better interfaces we deliver, the more people are coming to the ecosystem, and the more people who are excluded from the economics, from payments, from the economy, will be there. So the economy in general, our global economy, is going to win because of the adoption, because of cheaper, faster, and safer payments, and because of getting those people from remote countries or underbanked people on board.
Absolutely. I think it's a great part. And so for checkout, again, where you have that blend, how do you think about those regions that are maybe underserved? Is there some way that checkout again being a little bit more traditional to begin with. Is there something that you can do as well to help promote that?
Yeah, so at checkout today, we unlock payments for people from over 180 different countries to merchants all around the world.
Right.
Part of our value proposition to all the businesses we work with, whether they're Web3 or Web2, is that like regulatory piece, we try and absorb a lot of the pain for our customers. Ivan and I were talking earlier because we're hoping to sort of partner with NearPay, and like we do have a really painful questionnaire. It's like 27 pages, and Ivan was like, "This is causing me a lot of hassle," and I can totally sort of hear that. But at the same time, like, what we're trying to do there with our 27-page questionnaire is make sure that we're operating in a compliant way and that everything else, all of those other little bits of regulatory aspects that we can deal with on behalf of our merchants. So that's really kind of like how we're focused on unlocking this geographic piece. We have very close partnerships with Visa and MasterCard, and some of the most recent merchants that we've put live on Visa Direct, which is it's a card payouts solution, so the ability to take money from crypto and put it back in fiat onto your debit card, for example. And with CEX.io, which is a crypto exchange, we've unlocked over 140 countries for them recently. And so it's really kind of powerful to be able to partner with these big brands who have that reach to be able to then make those crypto on and off ramps more seamless. But as Ivan said, like every country is different. Every regulator is thinking about this in a different way. And so what we're trying to do is navigate both sides of that to support these bridges. And I think that some of the key drivers are going to be around unlocking regulation. They're going to be around identity solutions that help crypto payment rails comply with existing regulations, because crypto is not unregulated, right? Like it still has to fall in within all of these regulations that exist today. I think stablecoins is going to be a big driver for greater adoption for crypto as a payment method. So I think there's some really great things to see over the next couple years.
Yeah, I kind of, as we're getting near the end here, I really would like to maybe just kind of, you hit it on a little bit, but the lessons that we can take from traditional fintech that still probably need to go into crypto. We're so caught up in, I think, trying to be disruptive all the time, and that crypto is so innovative and we're going to change the entire world, which I think it is going to change the world. But we can't just immediately do that. So what can we learn from traditional finance as we transition to this time of crypto? Whoever wants to start.
Me?
Yeah, you can start, Elena.
Well, maybe I'm speaking about it like it's third time in a row, but what we need to adopt is good interfaces and easy onboarding of users.
Sure.
Like, like so the more businesses we have here, the more people we have using our systems, the better for the planet and for all of us. So yeah, easy adoption is something we need to get from Web 2.
Yeah, makes sense. Ivan?
Well, I think that we can learn is the ease of use. My grandmother can get a card and pay in the shop.
Yes.
It doesn't take any. It's easy for her. It's not
Right.
difficult. And I think that still many products here in the NEAR ecosystem and other ecosystems are made for power users, experienced users, and I think that fintech, the traditional fintech, they have learned how to make extremely easy products, extremely beautiful and convenient products in the daily life. I think we need to learn something about the service of clients, because traditional banks have offline stores where they can give you the SIM card, they can give you the accounts, they can help you with something. Maybe we can learn something from the service perspective, talking, communication.
Yep.
And the second thing is the ease of user experience. I know many banks that do their job excellent. I know a lot of banks who do their job, not so good.
Right.
I think that crypto is still to learn how to bring not unexperienced users to their products.
Yeah. Jess, kind of want to bring us home?
So I think for me, one of the key things is this like concept of like graduality, or there's probably a better word for it, right? Like in fintech, we've seen this transition from only giving people access to like the simplest products. And over the last 10 years, we've seen, the ability for retail investors to access more interesting investment products. We've seen the integration of crypto wallets with your neobank account. But that doesn't happen overnight, right? Like you don't go to somebody who's only ever had a high street bank account that they've used with a checkbook and say, hey, suddenly you can do all of this stuff, but you have to, it's very complicated to manage. And this is where I'm a believer that like sometimes things can start in a more centralized way, but it drives interest and education for people to learn about maybe some of the more the benefits that true decentralization can bring. And we were talking about this earlier, like maybe NFTs, for example, are a great access point, especially if you can buy them just with a debit card and you don't have to interact with the crypto piece. Like it's a great access point for somebody who's new to crypto, and then often that person will go, okay, I want to learn more about this. I'm going to learn about actually holding cryptocurrencies or about DeFi, and so I think that especially with a lot of the companies that I am close to and I love working with, it's to say that yes, our aspiration as an ecosystem is to drive towards something that is very decentralized, and I'm a big believer in that. But the way that we're going to do that is by educating consumers and by building easy ways for them to interact with decentralized technology such that we can bring them those benefits over time. And so solving for user experience, solving for compliance is so key right now to make sure that we build confidence across the wider consumer base.
Absolutely. It sounds like education is a really big piece of all of this. So last kind of thing here, what could we do better from an education standpoint as a crypto community to get the mainstream audience to feel more comfortable?
I think that one of the things that we can do is actually be very honest about the limitations that we're facing. There's a lot of promise for crypto, and it's why I'm so excited about it. It's why I've been working in the space for so long. But I think if we aren't honest about the limitations today, then people who are new to crypto, especially in the corporate world, discover those limitations and then go, okay, like it
becomes scary,
it becomes a bit scary. And so I think by being very honest about the challenges that we face as an ecosystem, by making sure that people are treating consumers with respect and that they are being compliant, I think is actually going to be the biggest driver towards long-term adoption, because it means that people don't come here with false expectations and then get disappointed. They're actually encouraged to work with the ecosystem to solve those problems.
Absolutely. Ivan?
Well, I think that NEAR does really good things with this NEAR University.
Yes.
It educates people building, entrepreneuring, and many different other specialities. And I think that we need we need some more news, more good news from politicians, so the original people, just some common people, they are not afraid, like they just said, and they understand the language. Because sometimes I go to NEAR's Discord channel, and I don't understand sometimes all of the phrases there.
Sure.
So we need to talk on the simple language with all of the people, so people with average knowledge, they educate, they understand, and they don't fear, so they get into it faster.
Good. Elena, any last part?
Well, just have to add that we are all building bridges between Web 3 and Web 2 now, and our mission here is to hear and understand both people from Web 3 and introduce people from Web 2 to this marvelous technology with our good interfaces and our educative activities.
Yeah, no, great. I want to thank our guests today, Jess, Ivan, and Elena, and this was the Future of Crypto Payments. Thank you.
Thank you. Thank you so much to each and every one of those panelists to discuss crypto natives. That was an incredible piece. If you stick around, we have an even more special treat. He's got the best hair in the conference. It's James Prestwich from Nomad to talk about the meaning of settlement layers.
All right. My slides around? Here we go. Hi, I'm James. I work at Nomad on cross-chain everything. And the great part about being me at NEARCON is that I don't have to talk about the future of crypto. I just have to talk about the present. I get to stand up here on a soapbox and talk about something that annoys me a lot. And so the title of this talk is Stop Saying Settlement Layer. Like, really just stop it. It's a useless term and I hate it. We can skip over this because, like, this is just me. I've been in crypto for about 8 years. For the last 5 to 6, I've been working exclusively on cross-chain applications, bridges, trades, that sort of thing. I was an early contributor to Aurora back when it was just Ilya and a few guys in an office. This talk actually came out of a conversation I had with Ilya on Telegram, where we were arguing with some other people about whether settlement layer was a useful term or not. So the problem with settlement layer is that people make big giant charts like this, and like they put the settlement layer on some row and they lay out like 12 different things sideways. And it's just not very useful. Like, what is a data availability layer? What's a consensus layer? What do people mean and why do they do this? So in practice, when people are saying the words settlement layer, they mean one of 3 things. The first thing they might mean is the ledger of record for a specific asset. This is really easy to understand. Near, the blockchain, is the ultimate ledger for the Near asset. Ethereum is the ledger of record for the ETH asset. ETH doesn't move on-chain unless it moves on Ethereum. You can port that ETH over to other blockchains. You can represent it as tokens. You can have Near in other systems. But the ultimate arbitrator of who owns Near is the Near blockchain. So we talk about a ledger of record. And when people say that a layer 2 settles Near, they mean that they update some record on the Near blockchain. So because I'm terminally online, I've decided to lay out this talk as a bunch of tweets that people have made that are usually good, but sometimes bad. So this one is from Toli, the founder of Solana. And he's asking, does settlement layer congestion, does congestion on the ledger of record for Ethereum cause spreads on centralized exchanges? Does Ethereum having high gas cause spreads on Coinbase? And the answer is no, because while Ethereum is the ledger of record for ETH, it's the settlement layer, as they say, for ETH, it's not the ledger of record for ETH held by Coinbase. Coinbase controls those ETH. They can update the Ethereum blockchain, move it to other people, but ultimately, Coinbase has a completely independent ledger of record that keeps track of ETH in Coinbase. So when a trade happens on Coinbase and it settles, and you agree that you've got new ETH from Coinbase, you're not updating the ledger of record. You're not using ETH as a settlement layer. And so that's why high gas on ETH doesn't cause spreads on Coinbase, because nobody on Coinbase is using Ethereum. So Meltem is asking, is it even a good idea to have smart contracts on your settlement layer? She prefers Bitcoin to be just a ledger of record for who owns Bitcoin. Is it a good idea to have compute on the ledger of record? I mean, probably. Everyone loves smart contracts. We all use them all the time on Ethereum, Near, and other places. But this would be a better tweet if it didn't say settlement layer, if it said ledger of record instead. She's talking about the place that records ownership of Bitcoin. She's not talking about the place where Bitcoin trades or payments are made. So don't say settlement layer, say ledger of record. Don't say ETH is the settlement layer for ETH. Don't say NEAR is the settlement layer for NEAR. Say ETH is the ledger of record for ETH. And don't say ETH settles USDC, because that's just not true. USDC is settled by Circle. They own all of the dollars. They have them in a bank account. And when you make a USDC trade, Circle's permission and updating the USDC contract on some chain, because it's on 5 or 7 of them, is what actually settles the USDC payment. So Circle will usually honor USDC payments or trades made on the Ethereum ledger, but not always. There are well-documented instances of them not honoring it. The second thing people talk about when they say settlement layer is an enshrined bridge for a specific rollup. People love to say that rollups settle to L1, but it's just not true. So in order to understand why that's the case, we have to talk about what an enshrined bridge is. Enshrined is kind of a big, funny religious word. We don't use it very often. In this case, we mean a bridge that is built in to the protocol. Optimism, Arbitrum, ZK Sync, they all have bridges built in to their protocol. All of these bridges settle to Ethereum, but they don't have to. And a rollup doesn't need a bridge built into its protocol. A rollup doesn't need Ethereum to settle payments or trades made on it. So let's look at a few more tweets about settling an enshrined bridge. So as Suzuha, a very interesting tweeter, is pointing out, a rollup is just a blockchain with specific settlement assumptions. You can extend any alt L1 into being a rollup as long as the execution is verifiable by the settlement layer. What they mean is that you can build a bridge to Ethereum as long as Ethereum can verify your consensus and your contract execution. Any chain can be a rollup on Ethereum if Ethereum can run the chain's consensus and state transition function. There's nothing magical about rollups that make them settle to a specific L1. It is a bridge that is built into the protocol. For a great example of this, if you are making payments on Optimism, you know half an hour later that your payment has occurred. You know, the person you paid knows, the Optimism network knows, everybody knows. But that trade doesn't settle to Ethereum for another 6 days and 23 hours. The settling to Ethereum part is completely unnecessary, and it exists only so that you could bridge that payment back to the layer 1. So when we say that ETH is a settlement layer for Optimism or Arbitrum, what we mean is that there is a built-in bridge, and we really like that bridge, and we care about it a lot, and we want to use it. Ethereum is not actually finalizing any of these rollups. They do that themselves. So Mustafa, founder of Celestia, is talking about, if the Celestia community wants to enshrine a settlement layer, this could be done with Cosmos interchain security, and by having the settlement layer be a consumer of Celestia's main chain. So he's saying that you could use Cosmos's interchain security model to build enshrined bridges for many kinds of rollups. But he is not saying that this settlement layer would finalize or settle any of these rollups. So this tweet would be better if he were talking about enshrined bridges rather than settlement layers. He's saying that there should be a focal point where we use shared security to build many enshrined bridges out from a hub, which of course should be built on Celestia because Celestia is very cool. Okay. This one is from Arjun, who's a founder at Connext. They work on cross-chain liquidity networks. And he says that he can't wait until people stop building shit on the settlement layer and build on L2s like they're supposed to instead. L1 block space is for proofs only. He is pointing out that these enshrined bridges compete with Ethereum smart contracts, DeFi applications, the layer 1 applications for block space and gas. And he is advocating that more computation, more work be done on the rollups, and then bridging back the results or the payments or the money or whatever to Ethereum. And he believes that it would be better if there were more enshrined bridges on layer 1 and fewer applications on layer 1, which is an interesting political position, but kind of one that I agree with. So don't say Ethereum is the settlement layer for Arbitrum or for Optimism or for whatever other rollup you like. Instead, you can say many rollups have enshrined bridges to Ethereum, and Ethereum attests to correct states after the rollup finalizes. Optimism finalizes itself, Arbitrum finalizes itself, and Ethereum attests to what happened 7 days after the fact. And rollups compete for Ethereum's resources. When we talk about a rollup being finalized by a settlement layer, we mean that it is consuming some of that chain's resources to make its bridge work. These rollups are not layer 2s, they're not scaling networks. They are applications that are themselves chains, and they are consuming resources on their layer 1. And that's why it's not really useful to talk about Ethereum as a settlement layer for rollups, or Near as a settlement layer for rollups, or any other chain as a settlement layer. We want to talk about where does the enshrined bridge go and why. Okay, so the third thing, and my least favorite thing, and the thing that I hate the most, is when settlement layer just gets used as a catchy boosterism. So like this guy, the founder of Stacks, which is a Bitcoin affinity scam. Good morning to the folks who believe Bitcoin can be a Web3 platform and settlement layer. What does this tweet mean? It means nothing. It means Bitcoin's cool. Guys, my chain is really cool, okay? And Zucky tweeting, should Atom be a settlement layer? Should the Cosmos Hub be a settlement layer? What does the tweet mean? It doesn't mean anything. He just wants you to pay attention to the Cosmos Hub. So you should really care about my chain, guys. There's no greater legitimization of Ethereum's value proposition than the world's economic settlement layer. And Ethereum, Visa is settling things to Ethereum. And app-specific layer 3 rollups that settle to category-specific layer 2 rollups in one big global settlement, Ethereum. And Ethereum is built to survive the next 1,000 years, and the settlement layer is going to bring immeasurable value to humanity. And oh my God. Sorry, I'm out of breath trying to read all of this. Settlement layer as a term is like 90% of the time just rabid fanboys trying to boost their favorite coin ecosystem so that you buy their coin and they make money. It's just like, why? So don't say any of that shit about layer 3 immeasurable human value. Do say, I'm out touching grass. I have a life when I'm not on crypto Twitter, and my identity is not defined by what coins you buy. So this is, again, my least favorite usage of the term settlement layer, and the #1 reason that you should stop using it is because every time you do, you sound like one of these rabid fanboys who don't know what they're talking about and just want to make a hit tweet so that people buy whatever. So, we've talked about 3 main uses, 2 that I kind of like but think could be more specific, and 1 that is just a straight-up sin and you should never do. And that brings me to the end of my talk. You can find me around NEARCON for the rest of the day, probably. I look like this. I'm very recognizable. Or you can go fight me on Twitter. My handle is _Prestwich. It's just my last name. Thanks so much for the time.
James, I promise you I will never use the term settlement layer ever again, okay? I promise. Guys, we have a lunch break now. We'll be back in here to kick it all off again at 1:10. Go out there, grab a beer, and have fun.
Greetings, NEARCON. The Layer 1 stage will resume in 10 minutes at 1:10 p.m. Greetings, NEARCON. Please welcome back your Layer 1 stage MC, David Morrison.
Hey, there we go. We fixed it. Look, I hope that you all had a brilliant lunch, and I'd just like to say something before we kick off with this next panel, because it's a really special one. Each and every one of you in this room, at this conference, watching online, anybody who has touched the revolution that is Web3 is making a real change to the future of the world, perhaps none more so than our next guests. We have Bianca Lopes, an identity advocates investor, Emiliano Gutierrez from Raíz Farms, Fred Fournier, the founder of Open Forest Protocol, Marc Johnson from Protocol Labs, and our wonderful moderator, Jared Thompson from Ready Layer 1.
Welcome, everybody. Thank you for being here today. Really excited about this panel. So we are going to talk about ReFi, right? And right now, Near Protocol is a climate-neutral blockchain. What does that mean, right? And now with Web3, there's so much happening and changing in the way we think about stuff that now ReFi's popped up, which is kind of cool, right? And it used to be, like, I almost think there's an obligation to think about environmental and all that kind of stuff with the project, but ReFi gives an opportunity. So let's go with that, all right? So first things first, for the audience, everybody, what is ReFi? Fred.
Okay, thanks for the question. I think it's really important to kind of frame where we are here today for the discussion. And if you think about DeFi, basically ReFi is the same concept, but in thinking about an inclusive approach of how we can bring more people on board in a different kind of financial system, and to have the poorest of this world, the people that are not part of this financial system, to be included in this approach. Obviously, Web3 is a very awesome place to do that because very community-based approach. So this is my approach to ReFi.
Nice, Marc.
Sure, yeah, happy to weigh in here. Definitely agree with what Fred mentioned, but I want to open it up a little bit further. ReFi, regenerative finance, also includes not only just the sustainability aspect of things, but also the vitally important inclusion, diversity, equality aspect. 2 nights ago, we were at a ReFi event where John Ellison, one of the co-founders of ReFi DAO, framed ReFi as being for everyone. And if you think back to 35 years ago, 1987, when the former Prime Minister of Norway defined the concept of sustainable development. She framed it as providing the necessary needs to meet the basic needs of everyone, and extending that to provide an opportunity to satisfy the aspirations to better everyone's life. And to me, ReFi is the natural extension and evolution of sustainable development, incorporating not only sustainability, but also those inclusion and diversity aspects.
Ooh, see, I'm liking this theme already. Like right off the bat, you're talking about like collective. Like let's just decentralizing maybe profits, decentralizing responsibilities, decentralization, right? So like instead of accumulation, recirculation kind of, right? So this is really cool. So let's jump on like projects who are doing this. So we've got some great projects here. We've got Raise, some open vertical farming, which is awesome. I saw the tour. Thank you so much, by the way, if you guys get a chance. But if you want to just talk about how you're incorporating ReFi into your project would be really nice.
Absolutely. So just coming back a bit to ReFi. ReFi for me is leveraging blockchain for climate action and social action, right? So it's planet, people, not only profit, but those two as well, right? So in our case, like the way we are using is to decentralize access to more vertical farms worldwide. So instead of a single entity or a single person having to finance the farm themselves, we can empower communities in need to finance and deploy their own farms. And I guess 2 key angles, scalability and traceability, right? So through DeFi or ReFi and blockchain technologies, we can accelerate the deployment of more vertical farms worldwide and trace their impact, right? So like by leveraging data and different solutions, we can actually have off-chain data breached on-chain to see how much impact we're actually generating in terms of water, energy use, and land saved, so that we can empower communities to grow more with less and grow more local food in a manner that makes the most impact for communities.
Nice, man. That Web3 mix of like real-world use case combined with blockchain technology, right? Like the superpower of it. And are you using like any specific techniques like decentralized fractionalization? How are you kind of thinking about getting that out to the masses who can help support the vertical farms?
Yeah, so we're designing right now a protocol like in 2 angles, right? So also the technology, the infrastructure to allow people to grow, and developing the processes, the software, so that it's way easier to grow than it would take like just to start from scratch. And then also the financing mechanism, right? So the financing mechanism so that communities worldwide that actually need it the most in places that are lacking access to water, food, etc., can deploy their own farms. So we see what we're building as a technological backbone, the nervous system of a new vertical farming or farming ecosystem.
Awesome, man. Well, let's talk with the second project. And like, what do they say? The best time to plant a tree is 20 years ago. The second best time is the end of July when Open Forest Protocol launched. Talk to me about ReFi and your project, man.
Yeah, so if you think about how we can address the big challenges of this century, obviously there are many. Restoring nature, conserving nature is obviously one of those challenges. Yeah. And what we are trying to address with the Open Forest Protocol is to kind of rethink how we address those issues. And especially with forests, how can we incentivize people to conserve and restore nature by planting trees or conserving trees? Yeah. And when you think about how people address this issue today, it's a very siloed approach. So, right, the UN is trying to do something at a very global scale. It's very hard. It's a top-down approach. We're trying to go the other way around with a bottom-up approach, providing the right tools, the right incentive to the communities on the ground to be owning their data, owning their future, and be recognized for doing that work. And that's basically what we are trying to build. There are, of course, a whole environment, there's a whole mechanics of Web3 behind that, but the purpose of what we build is exactly that.
Nice. All right, Bianca, I'm coming to you. Someone who talks with lots of ReFi projects.
I got patience.
Yeah, you're in that space. What do you think about ReFi and the projects that you talk to and hear about? What is some of the ways they're using it, some of the ways you like to use them, and sort of some ways you're thinking about it can be used?
I think when I think as an investor for regenerative finance, I think about the unit economics model, which is I think where a lot of the tokenomics that you've seen in like gaming could actually work when building incentive structures to save the planet. So there's actually a planet to game in, unless we're all going to go to Mars. So I look at what are the incentive structures, what are the legislative infrastructures. There's a lot of conversations that are not happening here, that are happening when you look at like open data and open banking as an example, that are amazing opportunities for financing projects that have what we call a sustainability or impact angle. So these are some of the things that I look at when looking at projects. And I think we're still yet to scratch the surface on getting institutional investment to be really seriously interested, which is something else that I look at regenerative finance. You look at like ESG bonds as an example. You look at alphabet bonds like 5 years ago, cost of capital here, actual debt instruments that should be available for this ReFi space that I think we're early on to the conversations and still early on to conversations like how do we build liquidity in these markets? Yeah. Right? So I think these are some of the things that will make the regenerative finance make sense and be something beyond the hype, beyond sort of the buzzword of sustainability.
You bring up a lot of good points. Because regenerative finance, this term is very new, right? Like most people in the audience have been in crypto and the blockchain space longer than the term, right? So it's almost like you're defining it within it. And Web3 is disrupting a lot of industries and giving a financial gamification aspect's really cool. So that is like really exciting to see. With all that, with like the Web3 has really strong technological advantages, right? So let's just go to you, Marc. One of them is data. I mean, we could go deep on why and all that, but just I'm going to give it to you. Data, ReFi, where are you at?
Yeah, certainly. I mean, we only have 21 minutes.
I know, right.
No, but in all honesty, certainly agree with a lot of the points that Bianca just made. We certainly believe that blockchain networks and crypto primitives have a unique opportunity to realign incentives and drive collective action towards enhancing global climate action. Right? And in recognition of this, we at Protocol Labs created an initiative that I focus on called Filecoin Green. And it really follows a dual mandate. One, to make this, largely because we see, as you mentioned just a minute ago, the disruption that's taking place. Web3, and we believe that Filecoin specifically is changing the world in all sorts of ways.
Yeah.
And one of those ways is that these systems can pull sustainability data through the economy quicker and with a greater degree of precision than you can with existing Web 2 tools. And so we're really focusing on core 4 areas of activity to make sure that we not only verify, make Filecoin verifiably sustainable, but also build these tools to agree to a degree of generality that they can also be leveraged by other Web3 systems and even legacy industries. So we're evaluating the energy use of the network, connecting it to renewable energy, providing ways for our nodes within our network, our storage providers, to decarbonize their operations, and then across the ReFi landscape, trying to catalyze this nascent environmental Web3 space.
Wow. I mean, there's so much to unpack there. But we've got aligning incentives, which, I want to be optimistic, right? Like, yes, you said something great, Bianca. We don't have a planet, none of this, there's no dApps on a non-planet, right? Unless we're already breaking into digital space somewhere, right? So how do you go about aligning incentives? And Fred, I want to jump with you because your project is really about connecting with real world people, talking about data, and getting incentives to understand them. Do you have any tips or tricks to educate, or what are you finding friction points there?
I don't have tricks, actually, but a pragmatic way of thinking about how you could reimagine those systems we're working with. I think the most important thing when you think about the different problems we're facing, there are so many, it's to be focused on one specific problem and to really understand the problem. Once you do understand that, and you do understand the problem from a ground perspective, from a community-based perspective, from a farmer perspective, from whoever, a town perspective, then you start thinking about how you could change this with the mindset of a decentralized approach, right?
Okay.
They might not see that, but you might, on your part, think about how you can, frame a proposition to them that is how you use data in a framework that would make sense to them. In our case, we frame that data by giving them tools to acquire that data themselves, to own their data, and then to make something with that data. And of course, that is already a first step towards this decentralization idea of it's not data that someone is acquiring for you, owning for you, like Google or Facebook will do. They will, and that people understand. And then you can think about how this specific problem with those people on the ground owning their data, and how this data is going to be moved on to the next level. So that is the acquisition part. Then the validation part, that's also where it's interesting. You have to think about how you validate this data. And obviously, DeFi has a specific way on how to do it. And our way is to also onboard people that are not into a Web3 approach, but they are outside of Web3 validating this data. So it's rethinking the data flow, but with a concrete proposition that makes sense to people on the ground and addressing a very concrete problem.
Wow, man, I would like to go into one of those meetings and watch you go to someone who doesn't know and explain them through that whole process, because it's a lot and it's really important. Emiliano, what about you? What are you finding some friction, and also how are you educating?
I think on the data side, and what's interesting about what we're building, we have a controlled environment inside each farm, right? So we are using water, significant amount of energy, which we are creating our own clean energy, but we need to quantify that, and I think what OFP is building and other players like MRV solutions to really have that certainty of what is happening either in a forest or at a farm, right? So once that is tracked and quantified, I believe ReFi allows the capability to tokenize it, right? So once we tokenize it, for example, and we can have on our side impact tokens, right? So carbon is of course, carbon credits are something that's pretty new and growing, but there's also other co-benefits such as water or energy, right? So by having that data stream well connected off-chain and on-chain, we can quantify that and potentially plug to secondary market as well, unlocking huge amounts of value, right? So I think that's, in terms of challenges, it's something pretty new that is being developed, both the infrastructure to track and to plug into outside ecosystems, right? But I think that we're building it, and everyone here is on track to deploy it.
Man, like, that's like really cool. So you're talking about like tokenization, I mean, and then that opens up a whole world to the unbanked, the underserved, all these people. It just spreads out to the world. And this is, ReFi really does follow up with like, this is going to take a group effort. This is a community-based thing, right? So I want to bring up the community aspect. Like, just how do you think approaching a community and leveraging a community can help impact this, right? Because community is like such a buzzword, and like, you know, community, get community. What approaches should we be trying to take as, like, from a ReFi stance, and how to incentivize or bring on people like that? And
sure.
You want to jump in there first?
Yeah, happy to.
Okay, cool.
I'll start off by saying I think the community building aspect, the movement building aspect is one of the more challenging parts of this. Changing human behavior is oftentimes much more difficult than the technological solution. But for our part, I mentioned that fourth pillar earlier, we're really trying to catalyze this nascent environmental Web3 space. That's where we focus primarily on community building. And we're doing that through things such as our green grants. Earlier this year, I believe it was May, we launched our Green Grants pipeline, just this first round, which is $1 million that we've been doling out in different sizes, from 10,000 on the low end to 200,000 on the high end, to different early stage ReFi projects. That round actually ends at the end of this month, September 30th, but then we'll shortly afterwards be announcing a new round of equal or larger size. In parallel and in tandem to that, we are also hosting a number of events. We're starting this seminal kind of quarterly event called the Sustainable Blockchain Summit. We hosted our first one in Austin, Texas in March around South by Southwest, our second one right after ECC in Paris in July, and then we'll be hosting our third one in Bogota right around DevCon. Cool. Sorry, those are all Ethereum-based events. We'll try to get one at a Near event soon. But that is really focused on bringing together a whole slew of different actors in the space, from legacy industries, from the legacy carbon markets and legacy energy industries, together with all of these Web3 projects, focusing on these crucial environmental challenges to work together and move the whole space in the right direction.
Exactly. Fred, what about you with the community aspect?
Yeah, so I'm back with boots on the ground with my projects, our projects. The community aspect is super important, as when you talk to a community, sometimes they will be at a different level or different stage of understanding technology or what you're actually proposing to them. So it's a lot about conversation. The conversation we have today, we have them, of course, with the communities. So it's about, you know, how you bring them on to, I would say, a technological world, that is one, but also understanding the value proposition on what we build together. You know, what is the value for them? Why we build this for them, and how they're going to interact with this system, which is a very different system from what they have seen. Right? So we are providing them for free of charge new tools to do their monitoring. It's sometimes the first impression is like, are those guys really serious? Why would they offer this to me to do something that good?
Totally.
And then once you start the conversation, then you realize that there is eventually an opportunity to be part of a different system. That's the first thing. As they understand community, we come with the same language. So we connect with that. And then eventually they start thinking about how this is going to affect their business model or their day-to-day life. And that's where really the change happens, because when they start thinking about a different environment, different system, then say, okay, this is going to change my life somehow, and they get on. And then hopefully it's going to also create a ripple effect.
Oh man, dude, that is such a good point. Like I just think it's so interesting where we're going. Like your Web3 oftentimes can solve a solution sometimes that almost sounds made up, right? Like, and that's what you're saying. Like, if someone's like, well, I'm used to a ton of friction. I'm used to it being like just something I do to get like a stamp for my company. And you're like, no, this is actually like a whole new, you have to shift a whole narrative in any corporate, oh man, it's really impressive stuff. So, Emiliano, I'm going to tweak it a little bit. Composability, intertwining components, community. We've talked about this a little bit, and I thought it was a really good point. So if you want to share a little bit about that.
For sure, about composability, I think the ReFi space is not about single actors, right? I mentioned before, you need to integrate different ecosystems and different technologies, right? So in terms of, one project integrating with another, it's coming back to, for example, co-benefits and carbon credits, et cetera. How can we leverage some already existing technology and bridge that protocol with something else, right? And just wanted to mention something about community, right? So we're all about community in the sense that it doesn't make sense to grow food for no one, right?
You're like community. You're like
community-driven and empowering communities to grow their own food. And beyond that, it's empowering other communities to fund other communities, right? So it's global communities focused on solving a food chain system, right? So how can we create a more decentralized system through communities, right? And also that's where composability comes in. So it's not only about Raiz or what we're building, but it's also like how can we tap in and how can we help contribute, for example, for a cleaner energy grid, right? How can we like match a wild vision here is like for every farm we launch, we build, we will rewild another one, right? Or we will reforestate the same amount of land. So that kind of composability and just interaction and synergies with other players, that's what we need to see more of.
Nice. Yeah, the community, and like with a vertical farm, it really makes sense to get communities around it, and then they start seeing the value from it, and it's just a really cool. And then you expand it using blockchain, Near protocol, things like that. You're leveraging the Near blockchain system, you know what I mean? And then you're connecting with Marc to get some data, and this is all coming together.
Yeah.
Now, Bianca.
What do you want me to talk about?
Oh my gosh. So what do okay, so from your point
You've been all over the place.
Yeah, where do you hope this space is going to go, right? Like you're seeing it now, you're in conversations with people.
Where am I putting my bets on capital? Is that what you want to know?
Well, sure, that's great.
Sure.
I like that.
I think one of the points that I wanted to bring earlier when you were talking about data that people here that perhaps are interested in the ReFi space should know, this is a massive data problem. Like, even though we've agreed as a society and as a world in our 2030 goals, we haven't even agreed on how to track each metric in a way that is interoperable amongst all the countries. Surprise, surprise. So when you think about components and you think about building primitives, there's a lot of things that I'm building and investing in people that are building that is identity, that is infrastructure, that is kind of the boring stuff that will be required for all these models and these innovative solutions.
Yeah.
Some of the things that we were talking about is how do we bring the innovation Web3 to traditional industries? So I do a lot of work in offshore wind, and if you know a lot about offshore wind, like there's a lot of turbulence from those massive like windmills, and actually there is in the next 5 years a massive amount of windmills that need to be decomposed. Guess what that stuff is made out of? Plastic and fiberglass. So I look at things like how will component technology be married to blockchain for provenance so we can build incentive structures to actually compose this in the right way. How do you build professions? They're here building professions out of making sure we have a planet to breathe in and food supply.
Yeah, totally.
So I think that these wicked problems that the world has is what I'm looking at through the lenses of technology in the fund. And I think one of the things that the guys brought up earlier that's still not happening is the conversation with the regulators. The conversations beyond, is this a security if it's a carbon credit or not? Right? We need institutions. So these political plans, every single large corporate enterprise has an ESG fund, goal, or reporting criteria. And they're still lost in some sort of like digital transformation strategy from a large McKinsey on, am I reporting on recycling? So I think on the ReFi stage, I hope a lot of these conversations are about, founders here acknowledging that they need more founders, that we need more capital, more founders to build all the pieces to try to make sense of this mess we've made in the world.
Yeah, and do you think that yes, in ReFi there's specific projects, but do you almost think it could be something that any project should be aware of and allot some sort of time or capital to? Because we're in this together, right? Like, this is our planet.
You mean like the hot secrets? Like, if you haven't studied the carbon market, I strongly recommend you do.
Yeah. Like,
and climate science. If you don't know the trajectory we're on from an emissions perspective and what we need to do to stay in line with the long-term goals of the Paris Agreement in terms of limiting global warming to 2 degrees centigrade this century, learn up on it. It's quite important, and we should all be focused on it. We only have a few more years left before we can, in order to right our wrongs.
And I think expand, right? Like I'm doing like an NFT shark project in the Caribbean. I'm doing a seagrass, like where we're planting like grass on sea and trying to find a gamification with like a game called Heyday. So there's ways that I think what has worked in Web 2 and what problems we have in the world that, you know, your creativity and the creativity of the people around here can really make a change.
Yes. I mean, I could talk to you guys. We're coming into the end here, but man, this is all stuff that really should be deep diving and talking about. And I really am so glad that you're all on like the leading space of this and leading this whole change. It's been great. So our final question, so I can get a little is like, let's do the actionable takeaways as big or as small as you want, just something that people here sat for 30 minutes, listen to this, what can they do? And I'm just gonna kind of point and jump around. So Fred, let's start with you.
Yeah, I think as a call to action, I think we really need, as Bianca was mentioning, we really need people to think how to build solutions, give answers to the problems we're facing in a different way. And I think this is the space. We have the opportunity to do that together. We've talked about interoperability. We have talked about different things like that. But there are maybe thousands of other subjects that we can tackle. And this is a huge opportunity for us as a whole to tackle this together. So come join us. And if you have an idea on what you want to bring to this conversation, let's do it together.
Nice. And congratulations on your mainnet, by the way. Dude, that's awesome. All right, Emiliano, you're up.
So yeah, I would encourage climate action is something we need, and ReFi will grow exponentially. We see that happening as well. So definitely invite everyone to come into the space. There's not only vertical farms, reforestation, but there's also oceans. There's problems all over the world that can be solved through coordination mechanisms like the ones blockchain allow us to leverage. So yeah, beyond that, climate action, beyond being a need, it's also a huge financial opportunity, right? So incentives are aligned for us to make it as humanity. So we really need to take action now, and it's a pretty dope space. It's an amazing space to be in, right? So
totally. And the incentives, like, the reason we only believe the things we believe is because people made those rules 100 years ago or whatever, the Industrial Revolution. We have a chance to like rethink things, and that's like, I mean, we're here at NEARCON, and there's got to be a reason for that. And that's why this is such a cool space, because now there's incentive. Like 15, 20 years ago, natural gas power plants didn't want to riff with like a tilapia farm and tomatoes and like, you know, shrimp. That was like not their thing because it dug in the profits, right? And now to rethink like, profits don't have to just be about the end all. We've done that. We see where it goes, and now we're trying to right some wrongs. Bianca, takeaway. I know you've given so many. Do you have or just anything you want to say? I just want to give you.
I don't know. Just get aligned with yourself. There's like 17 ESG goals. There's like any problem you can kind of think, and it's like a time to be alive where you can get funded to work on something you're actually passionate about.
Search a problem, come up with an idea.
Search one of the ESGs, and like, there's a funding path, and if you don't figure it out, hit me up.
And so I was going to give you the because you got to catch your flight right after this. You are so you're the final one, man. Final point.
No, I will echo what Bianca just said. There's 17 sustainable development goals. Underlying those are 169 different indicators that are all tracked by about 320 different metrics. Right? There's a humongous opportunity landscape.
Yeah.
And well, I'll close with what I started with. I firmly believe that blockchain networks and crypto primitives have a really unique opportunity to realign incentives and drive collective action towards common goals. In my opinion, there's no better collective goal to drive to than enhancing global climate action. Yeah. So join us.
Awesome. Well, this has been a really fun panel, and I think that like ReFi, I want it to be that. It should be cool, because what you guys are doing is really fun, and you know, I think there's a time to change the narrative, and I really am appreciative of what you all are doing. Thank you so much, and have a great rest of your conference. Thank you, everybody, for listening.
Thank you.
So, you all just learned about how blockchain can be a positive force for the climate and help change the world. Your next panel is going to touch on how blockchain can help change the fan experience and explore the future of fandom. The title is SailGP and Oracle, integrating Web3 into the future of fandom. We have Amma El-Rawi from Oracle, Warren Jones from SailGP, and Chris Gent as your wonderful moderator from the NEAR Foundation.
All right. Hey, guys. We're here really to talk about Web3, fan engagement, sports, how all that's going to work together, what the opportunities are, and really where the space is going. But we've got some guys that are super qualified next to me talking about it, so I'd love for you guys to introduce yourselves, where you're from, what you're excited about in Web3, and then we'll dive in.
Sure. Up to you.
Fantastic. My name is Amr Rawi. I work for Oracle, sports director. And basically, my role is to help our sports partners using data and technology to drive value to the fans and on the track or on the pitch or on the water. Before joining Oracle, I used to work for 4 different industries. I worked for Tottenham Hotspur in Football Club. I work in Teleco for Vodafone. And I work for Barclays Cars for financial services.
My name is Warren Jones. I'm the Chief Technology Officer at SailGP. We're a very new sport. We're 3 years old, so we've been working to get foiling catamarans. I think you've all seen the video outside. Foiling catamarans going to speeds of, I think in Saint-Tropez, the last event we had, 99.94 kilometers an hour. So huge speeds of flying catamarans around the racetrack. We work with Oracle closely on huge amounts of data. The boats that I just mentioned are extreme IoT devices. Lots of data, lots of information coming through it, and how we handle that information in milliseconds is key to our sport.
So whether it's sea or on land, obviously sports are playing a big role across blockchains and layer ones from an adoption standpoint. So it'd be great to hear a little bit about, as you look at fandom as a whole, right? There's challenges today without the technology. So it'd be great to hear, Amar, a little bit about the challenges you see and the things that we're facing right now beyond just getting even to blockchain adoption.
Yeah, I mean, sports are no different to any other industries that we work with. We see the disruption in sports by data, technology, and innovation. And if you look at the sports moving from a local fan to global fans, that creates a huge opportunity for sports brands like SailGP and others, but equally as well create a big challenge for them in terms of how they will be able to engage with those global fans. I used to work, when I was working in Spurs, we were looking at how we fill in the 65,000 stadium. But today, it's about how would you cater for the global fan base. And then the other area of a challenge that sports are facing, which is the aging fan base. And again, this is from the sports side. Not every sports right holder have managed to reinvent themselves in order to engage with those younger fans that are coming.
And so thinking about technologies and the data and things that come off these boats, I think, Warren, you said 40 billion data points from last weekend?
Per day.
Per day. So think about how NFTs and that kind of stuff could come into being super dynamic, super smart. It'd be really great to even hear, before we get into that, how are you guys looking at innovating today, and how are you guys working with Oracle?
Well, if you flip it back a little bit, we look at the boats. We've got this huge amounts of information coming off the boats. And in traditional sports industry, you have, let's say, a motor racing event. They keep hold of that data themselves. So if I produce that data is mine. With SailGP, we're an open source data partner. So everything that we get, one team can see what another team is doing, and everything is open to that point of view. So we wanted to have the same way of thinking for our NFT strategy. We want the fan to be able to look what's behind the scenes, what's going on within SailGP, how the boat is working, where does all the data go, how does that work. This is all open for discussion.
very cool. I mean, I think from my perspective, when you're thinking about sports as a whole, whether you're on land or on the water, all this is about bringing people together, right? So we're here, about 2,000 people, so community really coming together. How do you guys really think about these types of technologies bringing people together into physical spaces and even connecting the digital space to actually drive more fan engagement, and not just from the traditional, like, you have value to me in buying that ticket? Like, how are you guys thinking about that kind of stuff?
So, I mean, going back again in terms of the local versus global fan, and equally as well, SailGP is one of the amazing opportunities compared to other sporting partners, where when we work together, we are looking for how could we deliver innovative approach in terms of how we engage with those fans. Any venues, whether it's a SailGP venue or a football stadium, have a limited capacity. Today, the way that broadcasters are broadcasting the sports events is a one solution fits all. Whether that you are, and even when you go to an event, I was in the Italian Grand Prix this weekend, actually watching the Grand Prix.
Why weren't you at the SailGP event?
So, but I mean, again, watching the Grand Prix from the race, from Monza itself, as a fan, you don't get to see all the events and you're not really be able to follow what's happening. It's an amazing experience with the access you get, but from a pure sporting perspective, it's not possible to feel and be kind of immersed in that experience. So this is one of the things that we are working together, is kind of how would you bring fans closer to the event, whether you are watching that event in person or were you watching it from your sofa at home?
Well, and so thinking about really bringing fans together and trying to unlock that value, you know, how are you guys working together today? What are the things you're innovating on? Obviously, Oracle's been a partner since the inception of SailGP.
So we were talking about fandom. So we create a SailGP app which has the ability to manipulate data. So you can go in and you can look at all the data from different boats. You have the ability to view camera angles. So go on, move the camera angles around. So all this is available for at the moment, and with the thanks from our Oracle to help us do that. We have the ability to delve deeper into the data. At the moment, we're given a subset of information to the fan. The plan is to have more information going on, and that ability of the fan to choose what they want to see. If I want to see what's happening on the wing, or if I want to see what's happening on the platform, I'll be able to go in and have a look at that information.
And so unlocking that kind of stuff, I mean, when you think about building apps and building things for the future and innovating, right, SailGP is a much smaller footprint. From an Oracle perspective, how are you guys looking at building with SailGP? Where can the tech that you guys are building together go from there? It'd be great to think about the other partnerships and relationships that you guys have.
Yeah, I mean, again, just one point about what just Warren was saying, which is going back to earlier point about the older model versus a new model, from a traditional broadcast model where, again, some of you perhaps are football fans and you're a Liverpool fan, and there's a Liverpool TV, which exists, a Man United TV. But I mean, again, hardly anyone is using it, and it costs a fortune just to deliver those type of channels to a very few people. But with the example, as Warren was sharing about the second screen experience, you're actually enhancing that experience to the fans. Going back again to your point, Chris, about how we are working with other kind of a sports brand, I mean, again, it's about how we can come together, and this is a great example. I mean, again, Near, SailGP, Oracle, coming together, and this doesn't happen often, by the way, in the sports. Most of the sports brands, they sign a sponsorship deal, and they want to deliver value to that sponsor, whether that is in ticketing or giving them exclusive experiences. But what we are trying to build together here, which is the loyalty program, is how you tap into the expertise from each of those partners in order to deliver a value to the fans and bringing them closer to the experience. What a sports fan wants is they want to be part of that experience that has been delivered by sports. They want to be associated with the SailGP brand or one of the teams. And we're giving them the means to do that.
That's amazing. And I know Oracle as a whole has been focused on kind of fan loyalty, fan engagement for quite some time, winning some awards across some products. You know, as you guys think about what does that future look like, the learnings, best-in-class user experience, like where can things go from here from a build perspective? Are there areas that you're looking at and playing with or wanting to play with more?
From a technology-wise, we're working with Oracle. Well, the three companies are working together. So how do we go to a Web3 version of what we've got? We know how to do a Web2 version, but what's the difference with Web3, and how can we build this on chain as well? And also the sustainability aspect of it as well. SailGP is built on sustainability values, and how can we be sustainable when we're thinking of this technology and we move this around as well.
And we were talking earlier about SailGP started in 2018, and Oracle have acquired CrowdTwist in 2019, and that did feel is one of the missing parts in the customer experience portfolio of Oracle. And CrowdTwist is basically the loyalty solution that is built with the one fundamental element, is rewarding customers and fans based on their engagement. When I was working in Spurs, the thing that fans hate the most is rewarding them based on the spend.
Yep.
And this is kind of the paradigm shift of all the loyalty program that perhaps we see in the market, from airlines that we were talking about earlier, supermarkets. It's all based on a transactional relationship. What we are trying to build here is a loyalty program that built based on engagement, based on an emotional connection with the brand. We would reward fans. The more they learn about SailGP, the more they are engaging with the brand.
And so thinking about scalability, right? The teams that you mentioned, what does the scale of something like that look like? Because I think when we're looking at mass adoption, this really is about scale, and one of the differentiators for Near is its ability to scale. I'd love to hear even, what does that funnel look like? How do we get to those masses?
Yeah, I mean, again, we do, and let me just share with you some of the figures, especially from Tottenham Hotspur, where I used to work with. So Tottenham Hotspur, Nielsen will going to come and say you got 250 million fans around the world. You look at their social media followers, and this is, by the way, what we used to sell when we go to partners. Said like, oh, you were going to tap into 250 million fans around the world. Fantastic. How many follow them in social media? 25 million, right? Almost 10%. How many are irregular transactors? Who knows about the 25 million? It's not Tottenham Hotspur. It's Facebook, Instagram, and Twitter. Tottenham Hotspur knows about only roughly 300 to 400,000 people who are regularly transacting.
So really what you're talking about is bringing the fan closer to the sport, closer to the team, and really creating those new relationship dynamics. And from a Web3 perspective, to unlock that, thinking of SailGP, having been to a number of the events, it's a newer sport, right? It's growing fan base. It's not the mass ticketed event. And I think primitive-wise, we talk about this a lot. We've got things like the DAO being launched and a team being owned for the first time, really close to a sport. And think about the data that can come through that and the access. It'd be great to even hear, what do you think that could look like? I know product development's still underway, but are there things that excite you most about the opportunity there? Because if you think about applications, it sounds like the first time to really be able to bring those things together.
Totally. With the CrowdTwist application that Oracle is building and how it can integrate with the Near blockchain as well is going to be a really, really interesting aspect. How can we get more fans to be engaged in what we do? How can we give experiences of the more things you do for within SailGP? So all those type of things are really interesting for us, and how we get to that point.
And again, going back to the same point, how would you get to those masses? You need to kind of realize and understand that you are catering from a diverse fan base, who some of them maybe is still on the using Web 2.0, and some of them maybe adopted already the Web 3. So how would you be able to deliver an experience that catering for all those fans? And the program and the kind of the loyalty program that we are building, as I mentioned, is all based on how you are rewarding fans based on their engagement. And then converting those, the more they engage with you, the more they gain points. And after they gain those points, you can convert those points into an NFTs in order to get an exclusive experiences.
Well, and so thinking about things like NFTs being a token type that could give you access to very exclusive premium experiences, whether that's in-app or on-site. I'd love to hear, I know Russell was talking a little bit about that yesterday, and these experiences are things that have never been able to have access to potentially, whether it's custom audio in the app or during streaming. Would love to hear what gets you excited. I know you do.
The possibilities are endless, really. You know, we have an area where we build the boats. It's like a pit lane in Formula One. The ability to walk around, to see the behind the scenes, that's available there. Out on the water, we have programs there where people can go out on the water and follow the boats around. These are, you know, they're not available to everybody, and it's pretty amazing.
And just one thing as well to add into some of those experiences, which is again the technology and the Web3 is allowing us to start exploring, is today we talked about the broadcast approach. With user-generated content solution, which is a source video solution from Oracle, you're basically making every single fan is a broadcaster. And then the other fans can see the events through the eye of those fans. And then the more, again, those fans engage with you, the more you reward them. And then you start building that fandom level to just kind of bring them closer to your event.
In essence, we at SailGP don't produce anything on site. We do everything from an off-site and remote location. So in essence, we're doing exactly what we're doing for our broadcast, but it's coming from the fan first. So it's pretty interesting approach.
And so as we look at that and the ability for a fan to get closer, I know the opportunity of something like an NFT could find you speaking with the athlete or with the coaches and those kinds of things, even in between races, right? So SailGP goes almost month to month and is scaling its total races, but it'd be great to hear, what is that access? Like, how do you bring fans closer potentially?
Well, we have the ability for a fan to actually talk to the athletes on the boat at the time they're in downtime of racing. So we have 11-minute races, 11 minutes to 15-minute races. Between that, then they get set up ready for the next race. The opportunity there is to have a conversation with a fan. Really, they can tell them what they did right or wrong.
That's amazing.
And Chris, you touched on a really important point, which is a lot of the sports brand that we work with. One of their biggest challenges is that they have during the event, whether it's kind of the Grand Prix in the weekend, the fan is actively engaged. But what do you do between races? What do you do pre-event? What do you do post-event? When you don't have your hero content, which is the race is happening. And this is an opportunity to start engaging with those fans by delivering to them whether exclusive experiences or exclusive content.
And so with SailGP, how are you guys thinking about that today? Are there things that get you super excited, like that you'd love to have happen? Whether it's realistic or not, is it getting a Slingsby coffee in the morning every Monday to get your week going, if you're a super fan, if you will?
Yeah, exactly right. But as I said, its possibility is endless. What can offer, but it's how the fan integrates with SailGP is the bit that we really need to work out. And we're working with both your teams on how we can change a fan-centric approach, but not copy what everybody else is doing as well. This needs to be a Web3 take on it, and how do we do that is pretty interesting.
And so I know that you guys have very much embraced our community in a lot of ways and gone deep into docs and the technical nuance of things. I know you've talked with the Mint-based team, the Satori team, and a number of others. It'd be great to even hear, when you look at getting to best-in-class user experience and onboarding people into this space, like, what are some of those friction points you've seen today? And I think one of the most interesting things for me is the feedback that comes back from partnerships like this and from quality building teams.
We had a gallery, an NFT gallery in Chicago that was pretty cool. Where people interacted with the NFTs, they could purchase anything if they needed to as well, using all the tech stack from Satori and Mintbase as well. It was pretty cool on how we do that. And it's now how we're going to move that into our SailGP tech stack as well. How that integrates as well is going to be the fun part.
That's very cool. And even the implications of that, I think, as you're talking about the loyalty product in and of itself, being able to build that stuff in, I think could prove out here in SailGP, like, this can be frictionless. We can remove a lot of those barriers.
Yes. We're a Web 2 company moving into the Web 3 space, so we're still going to have some Web 2 customers. So that frictionless wallet approach needs to happen. So we're working, and how would that work if a Web 2 user was just going to see that? How can it be work for a Web3 environment? So that's our challenge.
I love it. And are there things that, you've worked on a number of like award-winning products that have come out of Oracle in the fandom space. Are there things that that we need to be doing better, or that you're thinking about of how do we help CellGP kind of innovate?
Yeah, I mean, again, going back to the same point that we were talking about, one of the really exciting, what make us really exciting is when we were doing those workshops with the team from CellGP and the team of Near, we are kind of redefining some of the things that has been even thought about before in the sports industry. I got a privilege to work with many of our sports partners, and one of the things that makes me excited about this project specifically, that we are trying to create things that has not happened before in the sports industry. Try to bring 3 key partners or big brands together in order to deliver an immersive fan experience to those fans, as Warren is touching on, how we bridge the world of Web 2.0 to the Web 3 in a frictionless experience. How would you redeem those points to an NFT and blockchain technology? How would you kind of translate that into the digital world and the online and offline worlds?
And the metaverse.
And the metaverse, of course, because that is kind of delivered, whether we're talking about VR, AR, or XR, you start kind of tapping into new opportunities for bringing the fans closer to the event and the game.
Well, and even so, thinking pure like commercial opportunities, right? You guys are each running a business. You're in sports for a reason. And so thinking about metaverse and NFTs and all of that stuff, obviously we're working with CellGP, we're working with you guys on a lot of this, but even from an Oracle perspective, are you guys looking at this space as a whole? It sounds like you're obviously building here, but commercial-wise, it'd be great to hear how you're thinking about that, or what kind of stats you're looking at as most important.
From an Oracle perspective, there is no better platform than showing the power of Oracle solution than sports and CellGP, right? There is nothing else. I mean, again, I can go and talk about how great Oracle solution is helping manufacturing organization, but I mean, again, come on. It's not as exciting as when you talk about how is Oracle solution are helping a certain team to win races, or helping a fan to engage with their favorite athletes. And this is kind of driving to us the commercial value from an Oracle solution storytelling perspective. And I always, one last thing to say, sorry, Warren, I always say, if we are able to help CellGP and sports brand win races by milliseconds, then we are able to do it in any other industry.
No, I agree with that, because we built our stack on Oracle at the moment, and everything that we do, to get those milliseconds back and how we be able to see how fast the boats are going, that's all built on the Oracle stack. How can we pivot and move over to to keep what we're doing, but also have the ability to to have assets on chain as well. So that's going to be really exciting for us.
Well, and it sounds like to a degree there's an opportunity here even around like fantasy, right? So if you're able to plug in the amount of data streams you guys have going, being able to engage someone in a non-traditional sport in a lot of ways, I'd love to hear even how that might excite you or not.
It's exciting. We do a lot of augmented reality. If you've seen the video with water, you can't paint anything on there. It's water. So we invented augmented reality, the way we can put the course, the area of sailing on there. So we utilize that then, and we move that around. So the possibilities of utilizing that in other industries or other technologies is something we're looking at as well. So we're pretty excited about that.
Very cool. I know Metaverse typically lends into conversations with gaming. I know that there's an e-regatta game today. When I think about access and fandom and the ability for you to maybe collect a certain subset of NFTs, for example, or collectibles, being able to get into that, it'd be amazing to see, could you actually build an e-regatta game that is Web3 based? And could you get access through something like the Oracle activations and build?
Yeah, I mean, again, going back in terms of the model changing, because we are not again, as we are trying to co-innovate in terms of to engage and finding the way to engage with those fans. But this is kind of, if you think about it, long time ago, people used to kind of collect cards about the sports. People want to have merchandising, but again, that merchandise have a limited reach to the people around the world. So the metaverse is opening new commercial opportunities for right holders like CellGP to reach out to those fans around the world.
Well, so that's actually interesting. I'd say let's dive into that a little bit from a commercialization perspective. So really what you're saying is the pie is growing in a lot of ways, and the opportunity to truly engage people in a meaningful way. Super fandom and word of mouth are some of the strongest advocates for sport, for technologies. Is there stuff in that space that you're thinking, hey, we can prove this out in SailGP?
After you.
Yeah, I mean, this is exactly what we try to do. I mean, again, you definitely need to kind of cater for your kind of existing fan base and looking and analyzing what the fans are interested and want to do. And this is what, as Warren was saying, in terms of how, firstly, to get them to sign up. And again, another example from any of the fantasy league, they have millions of fans sitting there, but you're not able to commercialize those fans or even building a genuine relationship or a pure engagement with them. And this is exactly what we try to do here with the loyalty program that we're building with SailGP, is how we are able to building and bringing the fans. If they change any data with us, then we are able to personalize that experience to them. The more they personalize the experience, the more we bring them into their fandom level.
At SailGP, we look at it as technology first. How can we use technology to reach the fan, to be better at what we do, to be able to more people to watch what we are? And from that point of view, then we can work out then what technology we use and what platform we use, etc. But for us, it's all about technology and how we move that forward.
Well, and so we're obviously in season 3, and we're moving to the next race in another 2 weeks, the 24th, 25th in Cadiz. So it'd be great if folks are curious about what this is all about, what the teams are building, how you can start to experience fandom in a new way. And go to the SailGP booth. There will be tickets available for the next event. So it'll come out, experience it. You're probably thinking, sailboat racing, I don't understand this, what is it? I think you can't believe it till you actually see it up close and really see what these guys are doing. The amount of tech that they're pumping through the tech bases every weekend and being able to get that up close and personal with it will really probably change the game. Is there anything you guys like to close with?
No, I've really enjoyed myself here. It's my first NEARCON, so it's been really good. I'm still learning.
No, I mean, as I said, thank you very much for being here. I really encourage you as well, as Chris mentioned, to join the SailGP, because this is going to be reinventing the way sports brands are engaging with the fans and redefining fan engagement.
Awesome. Thank you. Right on the money.
Huge thank you to our previous panelists for that wonderful discussion. I hope you learned a lot. I sure did. But now we've got one which is very close to my heart. We're going to talk a little bit about how DAOs get shit done. Well, actually it says get work done, but I thought that would be a bit punchier. We have Adrian Bello of the KinDAO and Primordia DAO, Jordan Gray of Astro DAO, Stanley He of Cornerstone DAO, and our wonderful moderator, Danny Azorio of MetaWeb Ventures.
You're over there. That one. Yep. I thought the first show was All right. GM friends, because it's clearly still the morning for everyone. Hope you had a wonderful evening out last night. As a reminder, there is an incredible after party that your NEARCON team has planned for you. There is going to be an amazing world-class DJ that you most definitely don't want to miss. So keep your eyes peeled for the official NEARCON closing party. As David mentioned earlier today, we're going to have an incredible panel about DAOs and how they get things done. And with that, we will actually start by introducing every single one of these panelists. And I'd love it if you can tell us a little bit about what your DAO or DAO product does, so that the audience has a little bit more context. Maybe Adrian, you can kick us off.
Absolutely. So I am part of the Kin DAO and Primordia DAO currently, both of which rooted from a real-life grocery cooperative called the Kindness Grocery Cooperative that was founded in 2020 during the pandemic in the San Francisco Bay Area to address the issue of food insecurity. And then we went on this long journey of figuring out that that was not going to address all of the issues that we wanted to see changed in the world. So we transitioned into a DAO called the Kin DAO, and we are focused on collaboratively owning physical land to create self-sustaining food systems and microeconomies, practicing this decentralized governance in person, and rehabilitating our relationship with Earth. And then from the Kin DAO, we started another project called Primordia DAO, where we are onboarding 100 DAOs to NEAR by the end of the year. And all of these DAOs are traditionally excluded communities and folks who are focused on social good projects and sustainability projects.
Yeah, such awesome work. I'm Jordan Gray, and I work on Astro DAO, which is a tool, a website that lets anybody, everyday users, harness the power of DAOs. Under the hood, there are the Sputnik DAO contracts, which is the audited, diamond-hardened code that allows you to do your treasury and governance and everything else. And what Astro does is expose all of that in a web interface for anybody to use. In the middle, there's also an API layer that allows builders to index DAOs, all their historical information, and build bots and other things around them. And that's kind of the stack and what I'm excited about.
Yeah, thanks. So Stanley, I'm from Cornerstone DAO. So Cornerstone is the meta governance hub on NEAR and Aurora and Octopus. Basically, it's a DAO of DAOs. Cornerstone Treasury accumulates DAO tokens from other protocols and then lets Cornerstone users use one token to decide how the Treasury uses and votes with all those tokens. So that's how we achieve meta governance, because we identify the problem of scattered governance in the current crypto space, and it's so hard for retail users, for ordinary people to actually feel the power of DAO, to actually be incentivized to vote. So that's why we're building this meta governance layer on NEAR, and hopefully we can promote that to other ecosystems too.
That's really wonderful. And so what I'm really hearing is that these are all different kind of decentralized organizations that seem to have different purposes. And so I was wondering if one of you might be able to talk me through the different types of DAOs we're seeing right now, because I hear a lot about investment DAOs, I hear about DAOs of DAOs, I hear about other things. So maybe Jordan, since Astro DAO is really, the creator of DAOs, you can tell us what you're seeing.
Yeah, it's true. Astro is a DAO factory. So over time, the past year plus or so that Astro has been live, we've launched over 700 DAOs. And of those, we have about 100 to 200 monthly active DAOs, depending on when you check. And the DAOs that people are creating are really all over the place. Since DAOs are such flexible tooling, they're being used for social good causes. They're being used for the investment. They're being used for things like owning IP rights and doing things with characters that are shared resources. Video game DAOs, DApp DAOs, so managing and governing your protocols and your dApps. There's DAOs that are being used just for creative output. There's a lot of record labels, visual labels, artists collaborating, and that's very dear to my heart. That's how I got into this whole Web3 space, was through my art and tech nonprofit that I've been running for several years, and seeing all of that vibrancy and all of that enablement on the platform is just so exciting and so cool.
Wonderful. And I think ultimately what these DAOs seem to be drawing on is really an innate human desire for connection and coordination. And so I was wondering, Adrian, if you could talk a little bit about how people come together and collaborate through DAOs. It seems like there's an end goal or a purpose, but how does that actually happen, at least in your experience? How have you managed to drive forward activity or accomplish the goals you set for yourself in the DAO?
Absolutely. So I don't come from the tech space. Like Jordan, I'm also an artist and community builder, and majority of the communities that I'm bringing into the DAO space are also in that realm. So are used to working together. You know, we're used to collaborating and bringing all of our assets together and making things happen under very precarious scenarios. So when we're given a tool to be able to put all of this together, it's kind of easy for us. But it also is something to think about when we're moving in this space, that we're living in a place that we're not used to working together in this way. So the way that we're building and bringing all these DAOs into this space is one-on-one relationships. It's all about building trust, and we talk a lot about having a trustless blockchain. But in order to get to that place, we also have to be able to build real relationships with people. So DAOs are a really useful tool, but we also have to understand the concepts of it. And so having those real relationships, mentorships, slowly getting people used to it, and then really understanding the concepts is what people are going to need to be able to thrive in this space.
Wonderful, thank you. And one of the things I keep hearing about DAOs is that they're mostly flat structures. Some of them have a little bit of a hierarchy, but they generally are fairly flat. And that makes governance a very difficult human challenge in general. And so, Stanley, I'm wondering if you can tell us a little bit about the different governance mechanisms you're seeing in DAOs.
Yeah, for sure. I mean, I think DAOs actually like derives from the very first original idea of human organization, which is, you know, we started from, you know, simple democracy, one token, one vote, or one people, one vote. And to be honest, most DAOs are still utilizing that mechanism, you know, until now. That's the most simple one, and we also have more you know, complex mechanisms like quadratic voting, which actually tries to deter the influence from whales, tries to, you know, to get a more eco sort of right to all voters. And also I think we're seeing, you know, more complex structures right now. So because there are many topics that you cannot really just solve through one time of voting, right? You have to do, you know, multiple rounds of discussion and deliberation, and you have to first refine the topic. You have to refine it multiple times, and finally identify to define the real problem that we're trying to discuss. I think this is also where DAOs should work on. So I think we're seeing the collaboration between on-chain voting, off-chain voting, and also discussion on forums. I think those are all very integral parts of a DAO. It's not only about a voting mechanism. It's about a community actually talking about some stuff together. Yes, I think, you know, we're actually seeing the the evolvement of DAO over time. I mean, I think they're still quite simple compared to our existing, you know, let's say government organizations we see every day. But I think we're sort of, you know, reliving the human history on-chain right now, and yeah, it's great to really see all the progress.
That's very cool. And Adrian, can you tell us a little bit about what tools you've been able to use to function through these DAOs, since you have so much experience with onboarding people and communities into them?
Absolutely. Astro DAO is an easy one. That is honestly the home for everything that we've been doing. It's great because it is accessible for the folks that we're bringing on, and also ourselves. We had to teach ourselves before we even came into this space, and a lot of the other chains that we've experienced seemed really, really hard to get into. There was a huge barrier of entry, and so Near itself, that's why we're here, is the barrier to entry is very low, it's accessible, and Astro DAO is in alignment with that as well. So absolutely easy to use. It's where all of the governance is. It's where the assets are. And also having a governance form is really helpful too, to be able to reference all of the decisions in the conversations off-chain. So when you are making decisions on Astro DAO or wherever you are, then you can reference those things as well.
Wonderful. And I imagine, you know, the assets are obviously on-chain, but are you saying that you're putting your decisions on-chain as well?
Yes. Yeah.
Wow.
All decisions can be made on-chain. In this space, you can decide which decisions you want to prioritize when you are doing it on-chain. So if you, say, are making a logo and you're like, what color do we want the logo? Maybe you don't have to have that on-chain.
That's for the forum.
Yeah, that's for the forum. But it's up to you. You can still do that depending on how big your community is. For those more important decisions, you're going to want them on-chain. And the beauty of it is then you have transparency, and you can always go back and look at who voted on what and why. And even if bad actors are in the space or something fails, you can go back and you can look instead of it being this mysterious, what happened?
So here's a question about voting, because I have imagined this like in theory, but in practice. Does the DAO set thresholds for like what is required for a vote to pass? And who decides that? Is it a creation?
Yeah, I can speak to that a bit with the configuration of DAOs. We have been talking about kind of like what DAOs are a little bit, and I think that people have an idea of what they are, and that gets kind of seen as the default, but DAOs can be really flexible. And Astro allows you to do things that aren't necessarily flat, where there's DAOs of DAOs and different hierarchies and things, different groups, and then to get to the configuration of that quorum, the cutoff for how the votes pass, each group has its own cutoff. So 50% is what people would imagine being the default, and then depending on what kind of size that group has, if it's a group of 3 people, 50% is probably fine. If it's a group of 5,000 or 5 million people, you're probably going to need to adjust your quorum because you're not going to get 5 million people or even 250 million people to vote on something. So you kind of have to iterate as you're going, and that's one of the great things is even though it's all on chain, it can also all evolve, and the DAOs can upgrade themselves, even introduce new functionality to themselves.
But who upgrades the DAO? Is it the owner of the key, or is it like someone that represents the DAO?
Yeah, we're getting into kind of the technical territory. It's really interesting because Near has a flexible account model, which is just a beautiful thing, and it enables the DAOs to not have any access keys on them. So there is no key to the DAO itself. It's just a list of accounts that are allowed to take actions. And then you can say of the groups of people that you configure for those, which people are allowed to put proposals forward. And that could be everybody on the chain or a small group of people or some holders of an NFT or a fungible token. And then you also get to say who votes on things. And again, you've got all the configuration options there. So the complexity grows quickly. Those are just 2 things and different lists of users that can do those 2 different things. And you already have a bunch of different configurations that you can try out and see what's going to work for your community.
Wonderful. So it seems that just like in real life, you still need community managers to help run this thing. And so, Adrian, how do you find those people who are going to be responsible for managing these DAOs? Are they basically naturally people who are already managing the communities and doing that in the real world?
Yeah. So with ourselves and also with the communities that we're bringing on, most of the time, either the community is already functioning and they're working on a project, or they have a community that has an idea that they want to see into fruition. So in that, these folks have something invested and they want to see something change. So it doesn't take a lot of like, please come participate, because this is something that people want to do. I think you see that in some of the DAOs that have, like you were saying, a huge amount of community members, and that's really cool too. But you're going to have to configure it in a way and have those community managers like really go in and harness people and be like, yeah, like come and participate. But for the experience that I have, it's people that are really focused on making a change. So this is just a tool for them to be able to make that happen. And it doesn't take much motivation because we're already in motion. This is just like an extra thing to put in the bag. Like, ah, okay, we're going, doom, 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 and we're on our way.
That's wonderful. And the concept of meta governance is really interesting, Stanley. So can you tell us a little bit about like why we need meta governance?
Yeah, so if you think about it, like one blockchain is more like a nation, right? It's more like a nation country. It's more closer to a nation country than, let's say, a company. So there will naturally be multiple organizations, let's say within that nation. But you would somehow want some sort of overall governance, right? Meta governance on top of all those also scattered and separate individual organizations. I think that's, let's say if you are generally bullish on Near, you would naturally want to ask, hey, where can I actually influence, the future direction of Near as a whole, rather than just vote on this and that, right? I think that's why, that's what motivated us, to first, to first build on the meta governance sort of a front. Yeah. And also, I think it actually increases the overall efficiency of the ecosystem because there can be conflict of interest within, let's say, Near ecosystem. It's very natural. But you really need that one party to actually reconcile all those interests. And without meta governance, it's very hard. Let's say two protocols competing together is, their users all want to actually dominate the other one. So how should we actually reconcile their interests and achieve the optimal efficiency for Near as a whole? And that's where meta governance comes to work. Because you have skin in all games, so as a voter, as a governor of the whole ecosystem, you will naturally, vote for the best result for Near as a whole. And I think that's, something we haven't really seen, in other ecosystems. So yeah, I'm pretty excited to actually build that out on Near.
Hopefully we do that better in Web3 than some politicians, so we'll see. So we only have a few minutes left, so I want to do a quick 30 seconds hot take from everyone on the future of DAOs or anything innovative you're seeing out there. Adrian, do you want to kick us off?
Absolutely. So the future of DAOs, I think DAOs are going to absolutely expand as people start to understand them more. And as we do and people start to come into this space more, I encourage us to continue to reference and collaborate with the experts in collaboration. Right? We have experts in all different types of industries, but who do we go to when we're thinking about who has knowledge in collaboration? And there are two groups of people or two groups of beings that are experts. The first is nature. If we go into an ecosystem, which is what we're in right now, we're in a natural ecosystem, the Near ecosystem. You go into a natural ecosystem, if it has a high level of diversity, that's a clear indication of health. A lot of people think that there's a lot of competition that's happening, but actually, if you deeply study it, it's an intricate system of collaboration. These plants in a small space, if they do not have the nutrients from the ground, from the soil, they're going to start making nutrients to share with other plants. And they're going to start communicating with the other plants in order to, help them if disease is coming. There's also going to be the ecosystems that is homogeneous, and these are not going to be as healthy. So these are the ones that are not going to be able to regenerate, and they're not going to be able to keep having the nutrients from the soil because they're basically draining the soil. The second expert in collaboration are indigenous people everywhere because they are inherently connected to the land. So they create their culture and their society based off of the natural collaboration. So if we continue to work with these folks, then we're going to be able to learn how we can structure and be in this world in a way with ease and grace.
Wonderful. Stanley, hot take.
I guess. Yeah, I think I actually want to add on Jordan's point, on the flexibility of DAO configuration. I think that's actually the first task a DAO should do. Is actually determining the framework of your DAO. Like you have to actually, for a group of people to agree upon one set of principles to set up your organization, and that's in theory how we started our nation, our nation country, and that's also how DAOs should work. It's not like you join a DAO and just take it for granted, because that comes from the owner. It's not like that. It should be a group of people first through deliberation, and to determine what's our rules in the future, and after that's determined, everyone just works according to that rule to those principles, and then the DAO will develop on that track. I think that's something I would really want to see more in the future.
Wonderful. Jordan, close us off. Hot take.
I'm
looking for alpha here.
I'm going to say that DAOs are going to rock the business world in a way that we haven't seen since spreadsheets. They are immensely powerful. I think that we're on the cusp of a work revolution. And not only that, if we figure out how to incent voting and get people to participate in democracy, we're going to fix it. So let's fix democracy, y'all.
Thank you.
Let's fix democracy. Let's do it. Let's do it, Jordan. Thank you so much to our wonderful panelists. Ladies and gentlemen, this is the last time I'm going to be on stage today. You've all been incredible. Thank you so much. We're going to take a quick 5-minute break. I'm going to go get really drunk. So if anybody wants to come and join, let's do it.
Greetings, NEARCON. Please welcome your Layer 1 stage MC, A Young June.
All right, welcome back, everyone. So to continue our afternoon, we're on the last stretch. We're going to go ahead and bring up a panel of some traditional finance folks to talk about going crypto and adopting or institutional adoption in a winter. So I'd like to bring up Corey Pugh of Bridge Tower Capital, Jeff Lavoie from Open Web Collective, Olivier Dang from Omudo, and Lula Ledesma from CoinDesk to moderate.
Hi guys, I just want to let you know that Rooh won't be joining us today, so it's just going to be the four of us. We're going to start off with an introduction from each of you and a bit about what it is that your firm does and its relationship with crypto. Let's start with you, Corey.
Thank you. Bridge Tower Capital, we've been around about 3 years. I've been affiliated with the blockchain for 10 years, primarily in the enterprise side of things with some of our different businesses. And then 3 years ago, we got heavily involved in this space. We went all in. So we built an infrastructure on a global basis. So we have offices in the US, Singapore, Switzerland, and soon Japan. And we've taken the approach 2 years ago to build infrastructure. And we use the infrastructure for staking originally. So we have 6,000 of our own staking nodes on bare metal servers that are 100% renewable energy. And those are in Zurich, Switzerland. And then simultaneously, we built our own marketplace with a regulated emphasis that institutions can have a safe place through KYC, proof of reserves, custodial support with wallets. And then we create product within the marketplace, as well as give an environment where you have know your customer, proof of funds, and the safety for institutions to come in. So we offer NFTs in a very customized way. We have different staking solutions where we'll provide an end-to-end solution branded for different companies who want us to run the whole thing. And then we've just come up with a product we're launching. In fact, Near is a part of it, that we will take a staked crypto, turn it into a security, and run the security down a securities exchange. And then you will have the ownership of that come into the owner in the form of the staked rewards.
Great, thank you. Jeff, do you want to discuss a bit about your background and what it is you do?
Sure. So Open Web Collective is a crypto-native venture capital firm, basically investing across the entire full stack of technology and blockchain. You may know Open Web Collective from having run the accelerator program at Near for the last several years. We recently spun out at the beginning of the year. But we've kept a lot of the DNA that we've built over the last few years. And so what we're looking to do is really invest across seed, pre-seed, and Series A very selectively. And what we're looking for is really high potential founders that are looking to solve real world problems. And essentially, a big part of that DNA is also having to do with the infrastructure and making lives easier for developers that are looking to build the future of Web3. And so that's a big part of what we do. We've been doing it for a long time. We work hand in hand with our founders. And while we do bring capital to the table, that's a big part of our value add. A huge part of what we do is actually being very hands-on from an operational standpoint and helping our founders scale and get to the point where they can be leaders in their industry.
Great. And Olivier, can you tell us a bit about what it is you guys do at Nomura in terms of crypto?
Sure. So Nomura is a very traditional financial institution. We are a 100-year-old Japanese headquarter investment bank with a global footprint. And so TradFi by excellence. But we've been active in the digital asset space since 2018, mostly supporting on the infrastructure side. So we've incubated a custody platform that is now live and stores, safekeeps, few billions of assets under custody, including for G7 government. We have invested across exchange, settlement platform, STO platform, and a few other kind of more centralized kind of digital asset infrastructure companies. And now we are moving a step further, and we've recently announced more like a crypto subsidiary that will get active and support our clients, institutional clients, get access to crypto. Trading, market making, asset management product, and venture capital. We're very keen to partner with Web3 institutions. We're not going to reinvent the wheel. We want to work closely with entrepreneurs, people who can bring institutional DeFi, institutional Web3 to our institution and work with them and transform our traditional bank in a way.
Great. I kind of want to look more into that, Olivier. All three of you come from traditional finance backgrounds, but you've chosen to invest in crypto and be involved in crypto. Can you elaborate a bit more on why?
Yeah, I think for us, it's a no-brainer. You know, like our traditional products are going to be fundamentally transformed by digital assets. Whether it is on the post-trade through, you know, T0 settlement using blockchain technology, whether it is through central bank digital currency that are going to transform how we have to deal with foreign exchange, or tokenization and the way to raise capital for corporate companies. So we need to be involved in this and get ready and transform our organization to meet those new challenges. The way to do it, though, is you can wait till those technologies are becoming mature and starting to transform your traditional businesses, but by then it will be probably a bit too late. And today, the only asset class that trade at scale with enough participants, enough volume is really crypto. So for us, there was no choice to get involved in crypto as a way to really get an early mover advantage into transforming our traditional businesses. So yeah, it's really an investment for the future. But on top of it, we like the asset class. We think it has a lot of kind of revenue opportunity, investment opportunity, and want to be active in that. Yeah.
Great, thank you. Corey, can you weigh in on that?
Yeah, I think Olivier says it well. For us, it's the premise is the blockchain. It's technology that, when I looked at it, it's more secure. You can transact globally. It's speed and the creativity to take traditional product and put it in a new form in a way that gives people access to opportunities they've never had. So for me, crypto is one mechanism of the blockchain. And I think you've got the enterprise side, which is going to come along very quickly. But the TradeFi, you know, you're getting a lot of investment banks, institutions. I mean, Nomura is a very, very large investment bank. You see Apollo and the rest of them coming in. And I think customers want access to something that is new, safer, more reliable, more secure. And for us, it was the global play, quite honestly. Like, I'm trying to wire something to the US, to Zurich. It's 3 weeks.
Right.
This expedites it.
Keeping with this institutional focus, Jeff, what do you think the institutions are looking for when it comes to Web3 in general?
Yeah, I think that's a really great question. I'm going to take it more from the investing side of things. Yeah. I think if you're an institution, there's really 3 key drivers here. The first one, I think everyone's mentioned it, it's become an asset class that's really difficult to ignore. If you look at the returns over a long period of time, it's difficult to ignore. So that's number one. Number two, I think if you look at it from a top-down standpoint, from a purely macro standpoint, it's one of the best ways to actually express your views. If you're classically trained in fixed income or currencies or commodities, the crypto space and blockchain specifically, from just an asset class, is really interesting because it's the ultimate expression of your views. And then finally, and the reason why most people are here today, is the technology. The technology is legit, it's been proven to work, and it's been proven to potentially be extremely disruptive. And so I think a lot of the institutions are seeing this as a technology platform shift, and that every day that goes by gets closer and closer to becoming reality. So that's what I think people are really interested about. And it's not just the top-down people or the bottom-up people or the people that are focused on technology or the people that just want to trade and speculate. It brings in everyone from all those different ecosystems.
Yeah, something we can't ignore is that we're like currently in a bear market. Bitcoin is down by like 70% off its all-time high. I'm wondering if you guys can speak a little bit to how institutions are feeling about this, like you guys and your firms personally, and like the general mood amongst like TradFi institutional investors.
Yeah, it doesn't necessarily help to have Bitcoin down 70% from the peak, but in a way, it doesn't fundamentally change our views. The market is cyclical. We know that for those of us who've been enough into crypto. If you look at traditional market, they are cyclical as well. It's not like equities is doing necessarily better, or the certain foreign currencies. So it's a cycle. In a way, for us as a financial institution, investing and building during the market downturn is a good thing. Talent is more available at more realistic price point. Frankly, a few months ago, it was very difficult for us to bring software developers with experience in Rust or Solidity. Now, suddenly, they're becoming more affordable and willing to talk to a traditional financial institution. On the more investment side, venture capital side, we see valuation becoming more realistic. Founders taking a bit more of a longer-term view to build. So in a way, the downturn has a lot of positive benefits. And fundamentally, I'm sure all of us believe here that it will come back. The fundamental drivers underlying crypto have not disappeared. It's a bit linked to the macro environment right now. And now is the right time to put in place the foundation as a bank, as all of us in the ecosystem, to build for when the market is going to come back. And I just want to say as a final word, Bitcoin at 20,000 today is very different to Bitcoin at 20,000 3-4 years ago.
Why is that? Can you elaborate?
Because now you have, many more millions of retail investors involved into this, and on top of it, institutions like us starting to look at this. That's very different to 4 or 5 years ago when it was a handful of guys looking at the asset class. Regulators, central banks, supranationals are all looking at this, and in a way, it makes the ecosystem much more robust.
Right. Corey, can you speak to this? How are your clients feeling? Like, what's the general mood? Is the bear market deterring people away? Is it going to put institutions off? What do you think?
Yeah, so going back, I think the bear market for us actually helped. In 2021, from the very start, we took a very conservative approach. Things we did, very compliant, from our company being set up as a public audited company with Deloitte to the products we put in place. But in 2021, I couldn't compete with 2,000% returns. And you had to go through a process. Today, what I'm seeing in the bear market is this is an opportunity for regulators to do two things. One is create more guidance, and two is there's a weeding out effect that you're seeing, and there's a proper way to do things. And I think for us, it's helping right now because it takes a little more effort to go through KYC. It takes a little more effort to get into a marketplace where you have to go through certain stringent rules. So we're actually excited about it. We think this is an opportunity for good companies to step up and participate and show there is a real use case and it can be done in a regulated, compliant way. And there's a great opportunity. So for me in the bear market, it's time to build. It's time to get after it and make things happen, get the infrastructure going again, and participate. And who knows what the future holds. But the blockchain's not going anywhere. Crypto has clearly established itself. Now you get some players and regulators in, and I think it's much better than it's ever been.
Great. Jeff, from a sort of VC perspective, have you had to be a lot more selective in what you're investing in? Can you give us some insight into that?
Yeah, so from our perspective, our due diligence process has stayed the same. We don't change it over time. So from a bottom-up standpoint, we have a very rigorous selection process, and we're very fortunate that we're able to be very selective. So that's something that will never change. It'll never get compromised, and we'll never change things to get more deals or to get less deals. What I would say from a top-down standpoint, tactically, from a tactical asset allocation or from a tactical capital deployment, right now we are just a little bit more cautious. So that doesn't change our strategy. Our strategy is the same. We're still looking for the same founders with the same ideas. The bar is just a little bit higher, and we're a little bit cautious. But I think to what Corey's point, is a really good one. I think right now, a lot of institutions are in one of two camps. They're in the frightened mode because of the volatility and they just can't handle it. And institutionally, they don't have the guardrails for it. So it precludes them. The people that have more flexibility, like I think a lot of us on the stage, are able to actually see that as a huge opportunity to find those really great founders, those great projects. And more importantly, for the people in this room, the developers and the founders, this is a great opportunity for you to build, to go out there and acquire talent and potentially even into engage in M&A.
Great. We're gonna.
I would just maybe add on this. We also do invest in early stage companies, and definitely one of the things we're going to be closely looking at is one is the commercialization plan. So no big picture, top down market sizing. We don't really believe in this anymore. Of course, it needs to exist, but we need to see founders who are also realistic in bringing revenues fairly rapidly, given the funding cycle is probably going to be still a bit challenging for the next couple of months. And two is no shortcut on regulation and compliance. If you try to bypass KYC, if you try to go against rules and regulation, that's at least for us is a no-go, and we're not going to support any of those projects. And I think many other more maybe established VCs and traditional investors are increasingly taking that view as well.
Go ahead.
Sorry, not to interrupt, but Olivier said something that's important: commercialization. And a lot of the companies. I mean, I've seen brilliant ideas over the last year, 2, 3 years. But the component that I think that we have to bridge is wonderful technology, great ideas, smart people. Now, how do I commercialize this? And I think that is a great opportunity today as well. You've got a little bit of window here to figure out your customer. How are you going to run the business? How is it going to be profitable? And how is it going to grow? And I think when you get that piece to what already exists, now you really get Web 3.0, it moves and it takes off in a big way.
I'm interested to hear about your sort of macro perspective on things. Olivier, maybe if we can start with you. We've seen Bitcoin correlate with equities in terms of performance a lot more over the last few months. I'm wondering if you've had to, if your perspective has changed. Yeah, could you speak to that a little bit?
Yeah, I think everything seems to be correlated right now. All of the asset classes are correlated to one. And we saw yesterday, like equity, especially tech valuation came down and Bitcoin dropped 10%. So it's clearly correlated. I think it's linked to currently this risk-off sentiment. Probably, many investors probably misjudge a bit over the summer the inflation pressure, and so now they have to revalue a bit and become a bit more cautious. So the macro environment for crypto, I think, will continue to remain a bit challenging, no doubt about it. And I don't see necessarily a decorrelation in the short to medium term between equity and crypto. Over time, it will, as the technology gets more embedded into many industries. But right now, it still is going to trade with a pretty high correlation ratio. Interesting to hear your view, Jeff. I think you have views on this as well.
Yeah, I think we're living through very interesting times. We haven't seen a credit cycle in 14 years. What we're going through right now is a very common credit deleveraging event. It usually happens every 5 to 7 years. It has for a very long time, but we've been living in a weird environment basically since the GFC. And what we've seen is the Fed has tried to raise rates several times in the last 14 years, and they've been held hostage by risk markets. And essentially what's happened, because inflation wasn't a problem, the Fed capitulated. And that's what we've seen happen for a very long time. That ended about 9 months ago because of inflation. Now we're seeing inflation is completely out of control. The Fed has absolutely no choice but to address it. And if you look in the United States, unemployment's at all-time lows, inflation at all-time highs. They're in a corner. They have no choice as to what they need to do. And so from our perspective, what we're looking at is more about what's the terminal rate, how much destruction is there going to be in the market, and how long are we going to stay there till? And so those are the important questions to have. From our perspective, the risk markets haven't priced it appropriately, and so that's why we've been cautious. Our cautious stance is going to change as soon as the risk markets realize that they've been wrong all along and that they need to adjust and that the Fed is going to keep their word. because what's happened now is the Fed has lost credibility. And so historically, they've been able to say, oh, we're going to do this. The market reacts. That transmission mechanism isn't working as well. So the Fed needs to reestablish credibility. So the long and short of it is, short term, I think we need to go through a little bit more destruction in the real economy as well as in financial markets. And then at some point, the Fed will have to pivot. There's no question about that. The question is when. And the reason why is we're stuck in this situation with debt and demographics, not only in the United States, but really everywhere in the world. And so at some point, that mechanism needs to come back up. The Fed just needs to elevate in terms of rates. They need to do a little bit of quantitative tightening. And then hopefully we get back into a place where inflation goes under control. But inflation is completely out of control now. It won't stop until probably sometime next year at the earliest.
Okay. Corey, I'm wondering if you can weigh in on this from Bridge Tower Capital's point of view. Does the macroeconomic current climate affect your strategy? Like how does it play into what you're doing?
Yeah, so some of us are old enough to have lived through 2008. You know, these things happen. They're cyclical, and it's not the U.S. I mean, it's the global. Everybody in the globe is affected by what's going on. I mean, it's cyclical. It's inevitable. And I think for crypto, it's challenging because you came off of this growth curve like this, which most of us know is not sustainable. You compound that with global inflation, recession. I mean, I think everybody's got their opinion on. I don't think you can deny it exists. But again, I think there's a great opportunity here. I mean, as we look at traditional markets, and you said it, Jeff, money's going to sit and wait, or it's going to look for a good opportunity. You take that regulated approach in a very constructive manner, and there are phenomenal products. I mean, I can put my money in the bank and get a 0% interest rate, or I can invest in a meaningful product like these gentlemen have spoke about. I can stake and get a nice return. And so I think for us, it's an opportunity to educate and get the word out there that yes, the global economy, it's not going to recover in a few months. This is a repeat of history. So I think you also have to slow down a little bit and be wise. And, you know, I think the good companies that I've watched in this industry and learned from and we partner with, they're patient. And I think you have to know when to go, when to stop, and educate. So for us right now, it's build, we have an infrastructure, what can we offer in a safe place for people to convince them to get your money in the right vehicle? And that, I think for us, is given, we've had more traction in the last 4 or 5 months than we have in 3 years.
Great. I'd love to focus a little bit on NEAR now. From an institutional perspective, what is it about NEAR that makes it more interesting or better to build on compared to the likes of like Algorand, Avalanche, Ethereum, the competitors? Jeff, do you want to start?
Yeah, and so we're very close to NEAR. We know them extremely well. We think the technology, not only what they've built, but also the team itself, is really top grade, and they're as good as it gets. So from that perspective, I think there was a panel a few days ago where Haseeb from Dragonfly was talking about the bullish case for NEAR, and we completely agree with that. And I think what's really important to understand is the nuances between the different chains. And so the analogy that he began, that I'll continue, is about different cities, so blockchains as cities. The perspective that I think is important is from a developer, or from a personal standpoint, which city do you want to live in? There's a lot of personal things that decide where you're going to go based on culture, based on language, and based on what you do. And it's no different for projects in crypto. It'll depend on what language the programmers are in, what type of end use case they want to have, and culturally what kind of community and ecosystem they want to be part of. And so NEAR has done an amazing job of being very developer friendly, and that's the theme that you've seen from the beginning. If you look at the language, the ability to program in different languages, the documentation, which is really advanced, it just makes lives easier for developers, and that's a reason why they stand out. On top of all the other things that you hear as NEAR being kind of an ETH 2.0, those are very important nuances.
But from sort of an investor perspective, what's attractive about it? I don't know if Corey or Olivier, you want to weigh in on this?
Yeah, I think we, as a bank, we are relatively L1 agnostic, so we are not necessarily going to invest or, at this stage at least, select one L1 to build. What we like a lot with Near, I think as Jeff said, I think the community is fantastic. I think it's extremely involved. Obviously, the technical features of the blockchain with its scalability, throughput is very impressive, and that's helpful as we think about the type of financial products we want to build, whether it is exchanges, lending platform, micropayment, all of that. You need the features that Near has been rolling out, and that makes it an attractive L1 to at least continue to support and investigate.
Corey?
So I'm going to answer this directly but carefully. I think every layer one has a unique position and unique attributes. And we support and want to participate and be a good partner to all of them. I will say with Near, I've been extremely impressed, and we've been to most of these events with layer ones. There's a humility. That's not tangible, but it's an underlying principle of a company. And it's, to me, Near is a humble group. I mean, you see the founders and the CEOs, they're walking around. That's somewhat atypical. I think the JavaScript and the Web 2.5 is a brilliant positioning play. I think it's spot on for right now in the times. So I think the tech, the structure, the positioning, and for me, I like to believe in companies who interact, participate, want to get to know the community. And we have been completely impressed in this event. It's not the hype and the pomp and I'm not saying that's bad. I'm not judging. I'm saying for me, it shows. And we've met several groups out here, Web 3.0s. There's real projects, and they're down the road. I mean, these are not just, there's great ideas, but we met 4 or 5 companies that already have full staffs, and they're down the path. And I think it is because of this. Java's brilliant. Web 2.5 is brilliant. They're bridging a gateway this way. And I think for us, we are very excited about Near, and we want to be supportive of everyone, but there's a reason we're here and giving everything we can to be a good participant as well.
Great, thank you. I have one last question. We only have a few minutes left. At the moment, institutions are primarily focused on Bitcoin and ETH, whether that be through options trading or investing through ETFs. Do you think that that's going to expand into other assets, like in the near term?
I think so. Still, when you go and speak to board of big pension fund, asset management company, and you talk about crypto, in their mind, it's Bitcoin, no doubt about it. And ETH is, especially around the merge and all the media attention around it is there. But they will, and they are gradually starting to understand that underneath those two big kind of coins, there is a very wide ecosystem of L1s, dApps, and gradually I think they will come into this. And you have equity analysts covering hundreds of small caps. Over time, you'll see crypto analysts covering hundreds of small coins, and with it, the sales, the trading, and the kind of institutional engagement across those. It may take a bit of time, but it will come.
Yeah, I think I would just add to that. I would say it's not the appetite right now from institutions that isn't there. It's really the ability to transact and to express their views. And realistically, there's regulatory clarity that's missing, but there's also the right guardrails. And so what we've seen so far is, as you mentioned, there's on-ramps into crypto and blockchain. A big part of that also has been funding venture capitalists. We've seen a lot of that. I think the next step is going to take place because the awareness is there, the willingness to do it is there. It's just the ability is not quite there yet, but I think that's in the short term that'll change.
Great. Give it up for my wonderful panel. Thank you, guys.
Thank you.
right. Thank you to our wonderful panelists for that amazing talk. I know the theme in general right now is winter, but it definitely doesn't feel like winter here. The weather is beautiful, the vibes are immaculate, so I'm not complaining, but to continue our discussions on winters, I'd like to bring up two special speakers, Jeff Amico from A16Z and Jack Collier from Near Foundation to discuss governing in a winter.
Great. Hello, everyone. Hi, Jeff. Good to have you.
Great to be here.
How are you doing today?
Doing great. Great to be here. Thanks,
Cool.
Jack.
Yeah, my pleasure. So we're talking about governing in a crypto winter. And Jeff, you're obviously a partner at A16Z, specializing in network operations. I guess, first of all, what is network operations at A16Z? How do you define it?
Sure. So network operations really refers to all of our on-chain participation in the protocols, DAOs, networks that we invest in. We take the view at A16Z that we want to be an active participant in all of the networks that we're investors in. And so it encapsulates everything from on-chain governance, voting on proposals, proposing things ourselves, delegating tokens, staking, running validator nodes, providing liquidity, all the ways that we look to contribute to our networks once they're live on-chain.
Brilliant. Thank you. So you mentioned governance, right? So, that plays a huge role in Web3. And it's always evolving, right? Across different ecosystems, think about it in different ways. And I guess being part of A16Z, you have great sight as to all of how the different protocols and projects treat governance. So it'd be interesting to hear, what are the most interesting observations that you have seen? And it'd be good if you could go into the emerging trends you're seeing in the space.
Sure. So as you mentioned, we've been investing in the space since 2013. But more recently, we've seen I would say the adoption of real on-chain governance in crypto, probably going back, I'd say 2.5 to 3 years now, beginning with things like Compound, MakerDAO, Uniswap, many of the kind of original DeFi protocols in the Ethereum ecosystem. And I would say over the course of that time, we've seen some interesting lessons, some best practices start to emerge. In terms of overall trends, I would say we're still very early in putting in place the right type of governance models, the right types of incentives. In particular, this stuff kind of comes to bear in a down market because that's when you really start to see some of the gaps, some of the fault lines in your organizational design or in your governance model. And so, I think what we've seen in terms of kind of trends more recently has been a little bit of a shift more towards, I don't want to say a hierarchical governance model in certain DAOs, but certainly a specialization within DAOs. So the idea that, if there are certain operational decisions to be made, you want to be sure that you have the right people within your DAO in place to make those decisions. So, if you rewind a few years ago, we didn't really have that kind of specialization in place. It was much more of a purely flat kind of hierarchy, flat governance model. All token holders decide on all types of decisions. I think we've seen some evidence over the course of the last 2 years that maybe doesn't work all that well in many cases. And so I think a major trend is towards specialization, towards putting in place specific folks who are experts in a given area and allowing them to decide on what the key decisions should be. So just to give an example of that, something like MakerDAO, for example, has put in place what they call core units. So these are effectively kind of like sub or like operating groups under the kind of overall MakerDAO entity. And so you'll have a core unit for legal, a core unit for growth, a core unit for engineering, a core unit for any number of other things. And in those cases, you're kind of entrusting those units to make more of the kind of key governance decisions. I think as these things scale and continue to grow, we'll need to continue in that general direction. But certainly the right governance model, I think, depends on the particular type of DAO that you're running. For example, something like a financial application, like a MakerDAO, requires one particular type of governance model. But on the other end of the spectrum, something that's a little bit less, perhaps financial oriented, a little bit less, perhaps high stakes in some regards, might warrant a different type of governance model. So you could imagine at the other end of the spectrum something like Constitution DAO, for example, or Nouns DAO for those of you who are following some of the new kind of NFT-based DAO projects. In those cases, you might not need the kind of hierarchical, rigid, cumbersome governance process. And I'm sure, as we'll talk about, we've actually seen in those cases participation in governance is oftentimes quite a bit higher than it is in some of these kind of original DeFi applications.
Yeah.
So those are just a few of the kind of recent trends.
Yeah, absolutely. And do you think there's a place for a really flat governance structure in a DAO or a project? Like, do you think that can work? And have you seen any good examples of them?
I think it can work in the case of a DAO that is, a bit more, perhaps one that isn't, operating a complex, financial application, or isn't trying to build and develop some complex kind of technical system. I think in those kind of models, it's just very difficult to have a purely flat governance structure. You really do need to have experts in charge of certain operating verticals. You need to entrust them to make decisions. You can't really, resort to purely flat, kind of democratic style governance when what you're building is effectively a company or effectively some kind of enterprise that's going to be competing with other types of competitive businesses. But I think there is still room for flat governance within DAOs that are more based around maybe maintaining an NFT brand or maintaining or pursuing some kind of social purpose or mission. Constitution DAO might be a great example. The SailGP initiative, I think, is another great example where in those cases you really do want to leverage the wisdom of the crowd. And in those cases, you're not worrying so much about your community not having the expertise to set interest rates or determine what these kind of fine-tuned parameters should be in some complex financial application. But rather, maybe you want their view on what kind of brand direction an NFT project should take, or what kind of features some kind of creative kind of initiative should take on. In those cases, I think a more flat, kind of democratic style governance does actually make sense and does actually add value to what you're trying to do at core.
Yeah, brilliant. And like the SailGP example, I think is a really good one. It gives people the opportunity to touch a part of the team that they love so dearly. So I think that's fantastic. I guess just changing tack a little bit. I mean, one of my personal reasons why I got into crypto in the first place and blockchain tech is it can put the power back into the people's hands, right? They can touch the thing and, that they care about, whether that be a community project or a company you work for, a government that a country that you're in. But right, honestly, do you think we'll ever get to the point where the masses can get involved in governance and we can bring these type of realities to life?
I think so, but again, I think it depends on the type of project that we're talking about. I think for financial applications and other deeply, deeply technical protocols, I do think there is some limit on the practical degree of control you can give to your kind of broad-based, of users. And frankly, I think what we've seen over the last few years is within those types of protocols, most people aren't all that interested, frankly, in participating in every minor decision that comes up, or they just feel like they're not fully equipped to decide on what the interest rates should be or what the collateral ratios should be. And so, I think there's often not really a desire for most folks to participate in that kind of governance, and that is, you can kind of see that borne out in the data, frankly. But again, like at the other end of the spectrum, for maybe an NFT project where people are, they have a sense of community around the brand, or they feel just passionate about whatever the underlying mission is. Maybe it's a sports team, like you mentioned. I do think in those cases we can certainly get pretty close. And as we've seen, participation is far, far higher in those kind of DAOs than it is in the more kind of financial-oriented DAOs.
Yes, absolutely. So if I can change tack again a little bit, A16 are obviously incredibly influential in the space. You guys invest in lots of different projects across lots of different chains. I guess, is there a contradiction there in terms, given that you are so influential, but while you're also pushing for the ethos of decentralization? Do you think there's a conflict there?
I don't think so. I think the folks who are part of the crypto team at A16Z are pretty true believers. I think we've been, as I said, we've been the longest tenured investor in this space dating back to 2013. We truly do believe in the underlying mission of decentralization. And I think that comes from a place of seeing how the prior two eras of the internet have played out with a front row seat. I think if you talk to folks like Chris Dixon or Marc Andreessen, they were right there when they saw the Web 2 era really consolidate around a handful of small, big tech companies and the effects it's had on all of the other startups that we invest in. And so it's not just an investment thesis, it very much is a deep-rooted belief. In addition to that, I think even from the investment standpoint, if these things are going to be good investments, it's only because they've actually achieved their underlying purpose of decentralization. Otherwise, I think they will largely not satisfy the investment thesis. And so I think we're very much aligned with the view that these things need to decentralize. They need to transcend their original founding teams and core developers to get to the point that they're even good investments. And so I think there are a number of ways that we put this kind of thesis into practice. So as I said, we'll look to participate actively in governance ourselves. So we'll vote with tokens that we have, but almost universally, within DeFi protocols, within DAOs, when we get governance tokens, we'll look to delegate a really large majority of those tokens out across the ecosystem. And so in a protocol like Uniswap or MakerDAO, for example, we'll vote with maybe 10% of our tokens, and we'll delegate the rest of them out across the ecosystem. And so we find that to be a really effective way to not only get more people involved in governance and to get kind of more people to have a kind of a say in the process, but it also, I think, systematically decentralizes some of our governance power ourselves. We've done this now for 2 years. We work with university clubs, we work with students, we work with nonprofits, and I think it's been a really effective way to eliminate some of that concentration that might otherwise tend to consolidate around kind of early investors.
Yeah, brilliant. Thank you for that. I guess my last question is, we're here at NEARCON 2022. We have some fantastic projects out there showcasing what they've built. And they're probably facing some of these issues, these dilemmas around governance and how they should approach it. And we talked about how there are different structures for different projects. I guess given your experience and your position, what advice would you give to them when they're thinking about this, when they're thinking about starting and building this right from the start? What practical things?
Yeah, for sure. I'd say the first and probably most important thing is don't decentralize your project too early. We see that all the time where projects, whether it's a rush to get out a token or a rush to kind of take their hands off the wheel for some other reason, we often see core teams decentralize their protocol a bit too early in the process. And what that tends to do is it puts your product out there into the hands of your community, which is great, but typically that means that you haven't quite found product market fit in some cases. Maybe the product isn't fully developed, it's not fully featured. And oftentimes that's just too early to entrust your community with those core decisions, frankly. And so what happens in those cases is the protocol will oftentimes stagnate, frankly, if you haven't built it out to the point that it's ready to be handed off to your community. The second thing I'd say, which is kind of related to that, is after you have gotten to that point where you think the product or your network is kind of fully featured, or it's kind of mostly fully baked, you should also be thinking about putting in place some kind of organizational design for the DAO such that it can actually function after that handoff takes place. Again, what we've seen sometimes not work so well is a team will, finish building a protocol, and then we'll say, okay, we're decentralizing, here's the token, we're handing it off to the community, but not put in place any kind of organizational structure for the DAO itself. And typically, as you would probably predict, that often ends in just chaos. There's not enough guidance, there's not enough direction for the community to really pick it up and know kind of how to run with it. And so, by contrast, what I think tends to work quite a bit better is once you're at that point that the protocol or product can be handed off to your community, I think it actually is beneficial to go a step further and say, or maybe even just propose, here is a hypothetical design for the DAO that the community should consider adopting. And maybe that means, okay, we're going to put in place a sub-DAO or a subgroup focused on growth, a sub-DAO focused on engineering, a sub-DAO focused on marketing and comms, and even maybe proposing certain community leaders to head up those different subgroups. Doing something as basic as that, I think, is really critical to kind of allowing your community to hit the ground running once you hand off control of the protocol. Another, I guess, kind of tactical kind of piece that's related to that is specialization. And we touched on this a little bit earlier, but ensuring that you have the right people in place to make decisions that are within their kind of wheelhouse, within their area of expertise. I think what we've seen over the last couple of years, again, is in efforts to kind of fully decentralize and to ensure that the protocol is decentralized as possible. And many early protocols went with a purely flat kind of governance model and a purely flat organizational design. And what that means is you're asking your community to make every single type of decision that needs to be made within a given protocol. I think what we've seen is that often leads to really poor or low voter participation. It leads to requiring or asking community members who maybe aren't qualified or aren't expert in a given area to vote on something that's outside of their wheelhouse. And overall, it just leads to a somewhat poorly functioning operation. I think a better model is to be thoughtful about what kind of decisions within your DAO should be entrusted to which types of people. It doesn't need to be the case that everyone needs to have a say in every type of decision. And frankly, as we said, most people won't even be all that interested in voting on every type of decision. And so being very thoughtful and deliberate and saying, okay, maybe for kind of core operating decisions relating to parameters, we're going to entrust those decisions to this group of people. Maybe they're more technical, maybe they're more financial, maybe they're whatever. Then maybe as you zoom out, okay, maybe the next kind of ring around that, maybe it's kind of treasury management decisions. Maybe for spending of the treasury below a certain threshold, you can entrust some group of people to make those decisions and to give them the discretion to kind of spend up to a certain threshold. Maybe you kind of zoom out again and say, okay, for spending above some kind of minimum threshold, we're going to require this group of people to make those decisions, and so on. But just a kind of general concept of ensuring that you're not, bogging down the DAO with, requiring token holders to vote on every minor thing. I think we've seen quite a bit of that. And so being targeted, being specific, matching up people who are experts in given areas to the decisions within that particular category, I think is really super important. Those are just a few things that come to mind.
That's brilliant. And like I say, I think that's really useful for the projects that are out there building as we speak on the NEAR protocol.
Yep.
And hopefully that's given people some insights as to how they should think about governance as they move forward. So we're out of time. Jeff, thank you very much for joining us, and we'll see you at NEARCON next year.
Great. Thanks, Jeff.
Cheers.
Thanks, everyone.
Thanks, everyone.
Thank you so much to Jack and Jeff. Yeah, I mean, how do we build in this chaotic industry with the best attempts at, creating order? Yeah, governance is very hot right now. Cool. So moving on to something that's very personally interesting to me is talking about privacy, right? Web3 makes a lot of promises. So to talk about Web3's privacy promise, the legal perspective, I'd like to bring up our moderator, Maya Shafani, with June Kim, Julian Neveau, Mary Beth Buchanan, V. Lee, and Brigitte Anderson.
Yeah. All right, you guys made it to day 3. I hope you're all feeling really good. We have a hot topic today, privacy in Web3 and the promise of that. And I have an incredible panel with me. I have 4 attorneys on board, so watch out, and 1 economist. So I'm going to go ahead and start with June. June is actually the GC at MENA Foundation, and he's also a board member of MENA Foundation. He is also a professor at Cornell University, and he focuses on blockchain. So incredible panelist. And then we have also Julian. Julian is the head of regulatory affairs at Ledger. And previous to that, he was a policy officer at basically the SEC in France. That's the best way to describe it. Thank you. And then we have Mary Beth. Mary Beth was the DOJ, was at the DOJ for 20 years. And previous to that, she was the GC at Kraken and Bitstamp, and is now sitting on the board for Cardano. We also have V. V is the head of regulatory affairs at Bain Capital, and previous to that, she was at the SEC for 6 years. And we have Brigitte. She is actually is leading the Center of Innovation in London, focused on blockchain, and also she sits on the Parliament group that focuses on blockchain. So today we're going to dive right into the Tornado Cash case. I don't know if you guys are familiar with what happened recently, but basically Tornado Cash was sanctioned on the US side for having a software that enables users to money launder. And then in the EU, the developer behind Tornado Cash was arrested, and also the allegations state that he was arrested for developing the software that allowed users to money launder. And we're going to dive right in. I want to talk to you guys about what you think about mixers and the necessity of mixers. So let's go ahead and kick it off. Mary Beth, do you want to take the lead on this?
Sure. Well, since lawyers are often very specific, if you ask me the question, are they absolutely necessary? I'd have to say no. Are they really useful? Absolutely. And so I think that there are a lot of really good use cases, and we're going to talk about some of those. Whenever you look at an issue like this, I try to think about all of the consequences, including the unintended consequences, think about how the government might look at something, and figure out how we can protect and maintain our privacy while still making certain information accessible in urgent emergency purposes.
Yeah, I think that on my side, I think that these kind of tools are very, very useful and sometimes can be a necessity. We've got this chance to live in Western countries, in Europe, in America, but some people do not trust their own governments. And sometimes they need this kind of tool in order to just exerce their right of privacy, because privacy is a fundamental right, and it needs to be protected.
in the same way, we need to fight against money laundering, illicit activities, terrorism, of course. But we also need to protect these kind of tools that can bring some privacy solution for people that have no choice. For example, Vitalik, the co-founder of Ethereum blockchain, disclosed that he used Cardano Cash solution to send some crypto assets in Ukraine, not to protect himself, but to protect the recipients of the funds. And that is very important. So sometimes it could be a necessity, and it's a very useful tools that can protect privacy of people, of citizens.
I would take the economics perspective on this, and from an economist point of view and a regulator point of view, we would be looking at three things. We would be looking at the technology, we will be looking at policy and the rule of law, and we will be looking at monetary and wealth management. So the mixers, from the technology point of view, they're clearly a fintech innovation, but do they have the integrity as a fintech innovation? That's a big question for many regulators. And mixers abusing the notion of privacy instead of protecting the notion of privacy. And I think that's a big deal, because the notion of privacy has been generated in Web3 in order to create better security, cybersecurity, protecting individuals, creating more efficiency in the system. But are we abusing privacy when it's used to obtain unauthorized financial benefit for oneself or for an organization at extreme level? So I will take up the notion of the abuse of privacy versus using privacy. And that's something we can discuss. Also from a policy and the rule of law perspective, I think that it's not always whether something is illegal or not, because most things are not illegal, but because it's not illegal doesn't always mean we should do it. And that's a big part of corporate governance and corporate social responsibility. We can do a lot which we don't do, and we don't need to go all the way to which is illegal. And in Web 2, there's been a lot of this. And the final aspect on wealth management and digital assets, this is really mixers. What kind of wealth management are they putting into the economy, and could they be controlled via monetary policy, or how are they adding to the system?
Thank you for that point, Bridget. So I wanted to actually ask the second question to June and V. What are some of the use cases that you've seen in the industry for mixers? Can we talk a little bit about the pros and cons of those?
I mean, I think for individuals, the value of having privacy with respect to what your account balances are, you know, your real-time financial transactions, the history of all of your financial transactions, and also like what you own, right, as more assets move on-chain. Like, I think it's pretty self-evident why individuals would have a privacy interest in protecting that information. And that, you know, there could also be safety reasons why you wouldn't want the world to know any of that. But I think also, you know, in addition to individuals having a privacy interest in this information, if you're a business or a DAO, right, there may be plenty of reasons why you don't want your financial affairs to be known to the whole world. You might pay your employees or contributors with crypto, and you and the individuals, the DAO and the individuals being paid may not want the world to know all of that. And then the other point I would make is that, you know, traditional businesses are never going to want to move more of their activities on chain if they lose the ability to keep a lot of their business affairs and financial affairs confidential. So I think that's a really important thing to keep in mind too.
Yeah, I completely agree. I think once you upload information on chain, it stays there, right? That's one of the toughest part of being exposed. It's scary at the same time. So I think mixers allow you to basically keep certain information in a way that is not discoverable by parties that could have good or bad intention. Ultimately, you know, I don't have much more use cases to add than what V mentioned, but the best example for me is like we all work in a crypto company and you get tokens as compensation, and the moment you move that to an exchange account, everybody knows you're selling. So everybody at the employee or your boss knows that, you know, you're trying to get some liquidity, and that's sometimes not information you want to you know, communicate out to the world. So I think those are some legitimate use cases, and going so far as to say fire could hurt, therefore ban fire, I wonder if it's the right approach.
Awesome. Mary Beth, did you want to add anything, or Bridget?
Yeah, again, from the economist point of view, I think that one of the reasons that there has been this kind of hostility from the policy world towards the mixers has been we have to be completely real. And in the crypto and blockchain space, which I'm very much in favor of, but we need to make sure that they are solving some of the major geopolitical issues we have right now. We have the living crisis, we have the energy crisis, we have the health crisis, we have the food crisis, hyperinflation, and a war in Europe. And when we do financial instruments in banks, and historically, always we have been looking at how these instruments can actually help to solve some of these problems which we have, rather than just solving individuals' problems. So from that perspective, this is possibly some of what these new fintech instruments are being benchmarked against. And just to a notion of privacy and transparency, we can all remember in the 2008 with the burst of the financial bubble, there was this big deal about banks having business models that didn't grow the economy, but it did grow the wealth of individuals. And at that time, George Bush Jr. Of America and Tony Blair in London decided that for companies to be listed on the stock markets, they have to be completely transparent about income of the boards and of the executives. And that has been like this. So we need to think about how does the blockchain revolution and the mixers actually think about these things, about transparency.
Awesome. Mary Beth, did you want to add anything?
Yeah, just maybe one quick point about the balance. If you have a particular concern and you want to protect your use and transfer of cryptocurrency, you'll have to really balance that with, if you do use a mixing service, your transfer may then be tainted, so that if you go on to a cryptocurrency exchange, that crypto is going to be flagged because it had gone through a mixer. So you really kind of have to, you know, balance that.
Great. So one of the things I wanted us to also cover, given our audience, we have a lot of developers here who are building their own code and trying to build into Web3. I wanted to talk about recently with the Tornado Cash situation, there's a lot of companies preparing on how to protect themselves in the future, set up sanctions program, have internal compliance policies to prevent what happened with Tornado Cash. So if we're opening it up to the developers here, what, hypothetically speaking, if I'm coding, what should I be thinking about when I code? And what are some of the legal considerations that I should think about as a coder when I'm building a product? Whether it's layer 1, layer 2, or into Web3. Anyone want to take that one on?
Do you want to?
Yeah, sure, I'm happy to. So I think that really depends on what product you're building, right? So if you're building a marketplace for NFTs, maybe the concern is less, but if you work on a protocol and you're creating a DEX or any kind of privacy-preserving mechanisms, then I think at that point, it's less about like, are there regulations out there I could be compliant, but more of how do I design this to avoid being part of the SDN list, which is, from business perspective, a terrible thing to happen. Right? So to the extent your code is working to help move money, values, and so forth, you always want to keep that on the back of your head. And when you talk to a lawyer, they're not going to say, oh, you need to design it this way. But you have to have some sort of a moral obligation to say, okay, can bad actors use my code? If so, what are some steps that I could take in order to mitigate that? Because that's as good of a business reason to do that as regulatory.
Yeah, and I know a lot of protocols that are decentralized to some extent, even before the Tornado Cash sanctions happened, had already started implementing some sort of screening or blocking mechanism on their front end, like through their website or their app. Of course, you have to distinguish between the front end and the protocol itself, right, which no individual may have control over. But a lot of projects had already been doing that, at the very least using like one of these compliance provider APIs to screen against the sanctions list, the SDN list in the US. But I think, after these sanctions occurred, there's probably going to be, I think there already is, growing pressure on some of these projects to at least screen for the sanctions list, but perhaps go a number of hops out too. And, I'm not anyone's lawyer here, and this isn't legal advice, but I think, every project needs to think about what their own risk tolerance is and what the practices of the industry is. The one thing I will say, though, sort of to push back on that is I do worry that there is a risk of over-compliance here where, because, in the case of the Tornado Cash sanctions, like OFAC hasn't issued a lot of guidance, and it's even unclear whether they appreciated the distinction between an autonomous smart contract that no one controls, and so no one would even have the ability to screen and block addresses from interacting with it, and then the front end itself, which may be controlled by some people who would have the ability to do that. So yeah, I think there is a danger of overcompliance. There's a chilling effect where people may be doing more than what even OFAC expects, or law enforcement in general. And I think you see that a lot, or you've been seeing that a lot the last few weeks with the discussion of whether people at the base layer, at the protocol level, should be, implementing some sort of censorship.
I would say that the real challenge, comes in when you're producing code that you're going to deposit for open source, and you don't really know maybe what it's going to be used for later. So I would just say, think about what you're doing, why you're doing it, and governments are going to look to knowledge, like if you know it's going to be used for something potentially illegal. But if you're simply, creating code to develop things, many laws in many countries protect simply writing code. But it's usually that knowledge plus that becomes an issue with certain countries.
Go ahead,
If I could add one thing. What's super interesting to me is the word decentralization doesn't really help when it comes to OFAC, right? When you think about SEC, when you think about FinCEN, money transmission, all these regulators focus on whether an application is decentralized. Whereas I think agencies like OFAC, they're interested in preventing crime and making sure bad actors don't get money. So to me, it was very surprising when they went after the domain and the wallet addresses using the Tornado Cash, because you could argue that it's decentralized application. To them, they didn't care, right? What's also interesting is what they didn't do, which is go after developers in the United States. They did not sort of try to put them in jail or seek criminal sort of implications. That really happened in the EU, and we don't know much details. So at a certain point, you're thinking, all right, you think decentralization is the way to kind of solve for regulation. It is true, but when it comes to OFAC and KYC, I would argue that the jury is out, literally, on whether that's going to hold the ground.
And speaking of sorry, go ahead.
I would just say that for developers, the question is, what should developers think about? And of course, developers need to think about producing amazing, good innovations and good technology. But in the UK, when we're discussing, we had a hearing in the UK Parliament, and there it concluded that a developer actually responsible or co-responsible, because of course the developers are for the first ones who see what works, but also what's possible. And so they're really making the trend and the directions in the supply of these new innovations, and they need to understand the business model behind it. They cannot just be blind to the business models and how it's used. But of course, those demanding these innovations are also responsible because they are demanding and adopting them. So basically, the answer is that developers need to understand that they are part of solving major socioeconomic problems or technological problems or financial problems, or trying to become a co-player in the economic system, so they can, and also it's also been said several times that no company went bust because they didn't get the code right. They went bust because of all other reasons.
Thank you, Birgit. So June, back to your point though, when you said jury is out. So Coinbase recently filed a lawsuit. They're filing a lawsuit against OFAC, basically saying that OFAC exceeded their jurisdiction when they went after a software versus a person or a government or a country. What are your thoughts on the success of the lawsuit? Do you think it would be successful? Just thoughts in general on it.
Yeah, first of all, I think it was a really well-drafted complaint. I was impressed by, it was as good as it gets, but I would have to say it's an uphill battle challenging OFAC's sanction. And historically, not a lot of people have succeeded in overcoming the sanction, especially after the war on terror. So it's going to be tough, I think, for those individuals to prevail. But I will say that certain challenges were successful. So in 2019, Exxon, the oil company, actually was successful in overturning OFAC's sanction, basically saying I was not given fair notice or due process. I think what's going to be interesting here is this case doesn't really have a lot of precedent, because OFAC has to basically establish that the smart contract code is quote-unquote property interest that would put the activities relating thereto under its jurisdiction. And we haven't really seen a lot of cases that played that scenario out. So depending on how the court sort of works, how the jury comes out, I think this could either set precedent for future OFAC SDN list updating, or they could completely sort of work to back off. So I think this is going to be a seminal case. Another interesting thing is Coinbase added constitutional challenge. And again, constitutional challenge when it comes to an agency's ability to prevent crime hasn't been much successful. But I almost feel like they had the Supreme Court in mind and put that in to eventually figure out this could potentially escalate upward. So it's definitely going to take time. It's going to be an uphill battle, but there have been successful cases before.
Yeah.
Great.
So I think that this certainly is an extremely unprecedented action. And I suspect that OFAC did it because, I mean, they wanted people to stop using this particular mixer. But what I think it will do, particularly because of the well-crafted complaint, it's going to cause Congress and regulators to really look at all of the issues that have been brought up by this action and look at what protections need to be put in place to protect developers, and what are the guidelines and requirements for OFAC to be able to put something on the SDN list. So this is a really good time for people who are thinking about these issues and recognizing that more protections need to be put in place to get involved, be part of the solution, give some examples of how these laws can be fixed. And so it's, I think, a rallying cry for us.
Yeah, so I would just add to, or follow up on that point. I think that I sort of go back and forth about whether the decision to litigate this and possibly let a court decide some of these issues at some point. I go back and forth about whether that is a better approach than trying to engage, in this case, OFAC or Treasury directly, or Congress, right, if you want to push for like a legislative solution to this. I think that the danger of proceeding through litigation is that at least like in recent times, the courts have been, they've given the executive branch quite a bit of leeway when it comes to national security matters. And so, the power to sanction Tornado Cash in this case is pursuant to like executive powers as opposed to an agency action. And so, you could end up in a situation where a court and possibly even the Supreme Court says, actually, we think it's within the executive's power to give OFAC the power to sanction autonomous smart contracts or whatever the constitutional or like legal basis would be.
Yeah,
I think that is the danger of proceeding through litigation as opposed to trying to resolve this through the legislative process or interacting with the executive branch directly.
Yeah, I totally agree with V. I think that we have to look at all of the interests here, look at how can we protect privacy, how can we protect national security, how can we look at what are the government's interests, and can those interests be addressed in a way that's far more less restrictive than what they've done here.
Yeah, maybe some words on that. Actually, the CoinDesk lawsuit would be very interesting because it will bring some legal clarity. The problem is that this kind of legal action takes years. And in the meantime, we stay in this kind of gray area where we don't know what will happen for developers, for Web3 projects, for DeFi tools. And it's a problem. But I think this lawsuit, it's a good thing. And just to add something on what has been said, it's an important conversation to have, I think, because here, for the first time, the US Treasury Department put a piece of code on the SDN list, on a list usually used for individuals, for national individuals and entities. And here you got a non-person which has been added to this list. It's a kind of a Rubicon here, if I may say. And we do not know where it does end, actually, because what happens if you use this Tornado Cash services not for illicit or illegal purposes? It's not clear. And, it's very important, of course, to fight against money laundering, illicit activities, terrorism. But privacy is also a fundamental right that needs to be protected. And as a fundamental right, he needs to be protected. And there is some exception, of course, regarding this fundamental right. But these exceptions need to be justified and proportionate. And the question that is raising here is the sanction against Tornado Cash is really proportionate? When you know that it's around, I've seen many numbers, but it's between 14% and 40% of illicit use regarding Tornado Cash services. So it means that more or less 70% of the use of these kind of tools are not illicit. It's like prohibiting cars, cell phones, internet, just because terrorists use it. Yeah. And it raises this kind of very interesting and very important question, I think, for privacy. And I guess that Coinbase will use some precedent because, in the US, they've got some precedent. For example, the Bernstein versus Court of Justice case recognize that code can be speech. There's several other cases, the DCSS cases, I think, also recognize that code could be speech. So I think this kind of precedent will be used by Coinbase. It will be very interesting to have the results of this lawsuit.
So Julian, actually, while we're still talking about your perspective, one of the things that I'd like to hear about a bit more is on the European side. So the coder was arrested in the Netherlands, and so he was arrested for basically creating this code that enables users to money launder. Do you have any perspective on that, or like any insight from the EU side?
Yeah, actually, we talk about the Tornado Cash and this, on the fact that the US Treasury Department has sanctioned a technology instead of sanction individuals, criminals. Here in Europe, it's even worse, if I may say, because the co-developer of the Tornado Cash smart contract has been arrested in Netherlands. And of course, I do not have any specific information. It's very hard to have clear information from the Dutch authorities. They've got a lot of information, but it's a lot of vanilla information on the net. So I don't know the whole story. But one thing is sure is that if this guy has been arrested just because he wrote a piece of code that could eventually be used for illicit activity, and that actually these tools was not designed for this illicit activity, then I think we should be concerned because it's quite hard, and it could be indeed it could be a kind of violation of freedom of speech, and the problem here is that we are in a gray area even in Europe. So we have to be very, very careful because we do not know all the facts in this case. But I think we can be concerned if someone has been arrested just because he put on the internet a piece of code.
Yeah, I just think it's crazy how on the US side, they were like, we're going to target the software. And then in Europe, they're like, we're going to target the coder.
Exactly.
And it just shows you how disconnected we all are. And we're not aligned yet. And it would be great if we could get aligned at some point and provide more clarity to the industry as a whole. One last thing I wanted to hit on, we're kind of winding down. But Mary Beth, one of the things that I wanted to discuss with you is recently the Treasury came out basically with their own publishing about how to actually withdraw your assets or get your assets from Tornado Cash. So I don't know if anybody in the audience has their assets stuck in Tornado Cash, and this might be a helpful way to end the session.
Yeah, so OFAC came out with some guidance just yesterday, and I think that this was a very good move on their part because they want to be reasonable. And they recognize that there are people that used Tornado Cash before it became on the sanction list, and now their resources are, stuck. And so what they did, they've told the public that they need to request a license from OFAC to be able to get their money back, and then, or rather tokens back. And then what OFAC will do is do an investigation, and they'll make sure, they'll determine to the best of their ability that it wasn't connected with some illicit activity, and then they'll return it. Now, I know you're probably thinking, oh yes, OFAC's not going to be reasonable, but I can tell you that I have dealt with OFAC recently. I approached them after the individual was arrested for going to teach in, is it North Korea?
North Korea,
yeah. And because we were interested in knowing what type of educational programs could we do to benefit people abroad and teach about crypto, and I wanted to make sure that we didn't violate the OFAC sanctions. And they were actually pretty reasonable. They said, you need to explain to us exactly what you want to do, apply for the license, and yes, we might just give you one. So that's the first thing they did. The second thing, they wanted to address all of the incidents of dusting, which would be the unsolicited, distribution after this was put on the sanction list. And they basically said, we're not going to prioritize those investigations, which means that they're probably not going to take any action.
Do you think it's notable, though, that they said that people who were dusted do have an obligation to block and report those transactions?
I can't hear what you said.
So they said that people who were dusted do have an obligation to block and report those transactions.
Yes. Yes.
So they didn't go back on, or they didn't backtrack on that, I guess.
Correct.
Yeah.
I just want to focus on I think we're doing something. We're in a very, very interesting period right now. And while we're discussing all the details of some cases we've had, we also need to think about how we are really developing a completely new financial ecosystem. And we're going to introduce a lot of financial tools over the next 4 or 5 years. And I think it's very, very important that conferences like this actually have these conversations on what kind of financial tools do we want to have, and how do we see the future financial system, and how is the financial system going to deliver everything which it should be delivering for both individuals and businesses and societies. And I think this is where we need to start. Also, so when we're talking about the protection of privacy, it's not really about just the protection of it. Privacy is an intangible asset which we need to ensure is used for wealth creation and not used for abuse.
Great. Thank you. I just want to make a clear distinction, though, that it's not a financial instrument in this case. Well, we don't know yet, right? So that's TBD. Maybe later on they might claim that a mixer is a financial instrument. But I think you all hit on excellent points. And I'm excited to see what everybody builds in Web3. And hopefully we all think consciously about building stuff, and don't be afraid to talk to a lawyer every once in a while. That's the ending of this panel. Thank you, guys.
Thank you.
Thank you to our panelists. Okay, so we're going to take a quick coffee break. Be back in 10 minutes at 4:15. We've got some alpha drop-in, so you want to be back. It's going to be hot. But yeah, please go get a beverage, hit up the bathroom, and then we'll see you back here in 10 minutes.
Greetings, NEARCON. If you have parked a car on the west side of the building, please return immediately to your vehicle as it has been booted and may be return immediately to your Greetings, NEARCON. Please welcome back Layer 1 Stage MC, A Young Joan.
All right, welcome back, everyone. So just like amuse me here, I've been wanting to try something this entire time. So this is my kind of my last chance, so let's do this. So I really want to start a chant. Can we all just start chanting NEARCON? Like, let's do this. I want this to be like, you know, everyone to just get really excited, really hyped. You know, it's been a long 3 days. We're all probably a little tired, a little hungover. But let's do this. Let's hype ourselves up and then get ready for some hot alpha to drop, okay? So let's go. All right, so NEARCON, 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 NEARCON. Okay, cool, thank you. All right, thanks for amusing me on that. Cool, so we're just gonna bring up Ilya and Henry Tofala from Cheddar to talk about the Near Digital Collective.
Well, hello everyone again. Hope you've had great days, and we have last but not least talk about Near Digital Collective. And because I have mental powers, I'll try to switch slides with my mind, but hopefully there'll be a way to do it a little bit more digitally. So I want to start with kind of the reasoning, right? The reasoning is that the governance is probably one of the most important long-term things in the ecosystem. And so we've kind of set up a very small slides to talk about what we're trying to build with this, right? There's a lot of kind of approaches and experiments that have been happening in this space, and Near has been trying a bunch of stuff, but we truly want to develop something that is community-driven. That's something that is able to kind of coalesce all the different stakeholders from the ecosystem and give them kind of both participation as well as ability to make decisions, and at the end, have a treasury, have a funds behind this decision-making to truly push it forward, right? And so kind of this is in many ways emphasizes the growth of the ecosystem, right? I mean, just looking here, right, going from last year's, you know, I think we had like 200-300 people at any moment, maybe like 600 total, but it was like a small, you know, tight-knit community. And we have, you know, almost 3,000 people here. Like, it's amazing. And obviously, there's still a lot of people who could not come. And so, like, that kind of grows, right? How do we represent it? How do we get people kind of continue contributing in a systematic way toward shared goals? So we started in 2018, right? Obviously, we did not think of governance back then, but in 2019, we actually started kind of looking into it because we believed it's an important part. Now, it was still too early, but I have actually my DEF CON talk in Tokyo was about governance, and it was about kind of some of the ideas around how we can structure that. So I've been working on this with Lane Reddick, with, you know, Blaze, with a lot of kind of people in the ecosystem for a long time. We've started our near enhancement proposals, right? The ability to kind of for anyone in the ecosystem to propose an idea how to change the protocol or how to standardize around some functions. And obviously, you know, we continued building the protocol. 2020, you know, very focused time on shipping mainnet, right? I mean, if you've been around, it was lots of, you know, stake wars, nodes crashing, you know, playing around why things don't connect. But at the same time, we started working on standards, on tooling, on governance, right? We launched Governance Forum to kind of have a place where people can not just, you know, create technical proposals on GitHub, but start proposing ideas and discuss kind of what's happening in the ecosystem. And after mainnet, pretty quickly we realized that we need some tooling to pay people, to have people collaborate on chain. And so that's what Sputnik DAO was, kind of first DAO tooling, really experimental. First version was very basic. If you remember, that interface was built, I think, in like 1 day or something, or 2 days by Dennis. And so very kind of early stage, but already trying to bring people together. Now, 2021, right, kind of first year of mainnet, a ton of stuff happened, right? The kind of Near Foundation that was formed in 2019 have started to kind of structure, and at the same time, the original team kind of went in different directions, right? And this was always our, like in our spirit, is we wanted to bring people together to build this infrastructure, to then build on this infrastructure, right? It's not like infrastructure is not the goal, it's a tool. And so we had a ton of kind of teams with early members separating to focus on different areas, right? We have Human Guild with Sasha and Vlad, who focused on gaming and kind of people, like various ways of earning. We have Proximity that's focused on DeFi and kind of making projects successful. And we had Pagoda, which kind of transformed a lot of the original infrastructure and developer tooling into a more like focused team. Now, we also had guilds, right? We were experimenting, how do we engage community across the ecosystem in a way that kind of inclusive, in a way that is representing in different places, and in a way that people can kind of self-organize and present something to the ecosystem. And so I also, it's been over a year now, proposed that we form a treasury that is able to do this kind of directly working with guilds, right? Instead of kind of the process being blocked or kind of interactive with foundation. Now, back then we did not have tooling. We did not actually have a massive ecosystem yet to support that. And now as we continue growing, right, we have ecosystem funds. We have regional hubs across the whole planet now, right? We have now working groups on protocol and community, on wallets, on standards. We want to truly kind of formulate it all in a single framework, right? In a way that is giving the clarity for everyone. So I mentioned that in my keynote, but we're striving for, I call it an autonomous ecosystem, right? If you think of it kind of the protocol, right? Protocol is trying to be kind of self-healing, blockchain protocol is trying to be self-healing autonomous system that operates out of the, nodes and agents in the system. But in a way, we're doing that on the organizational and people level as well. And obviously, it's more complex. People are not code. I know that. But we're still trying to align incentives, to create clarity, to make decisions clear. And this is, I think, is for me, probably the most important piece. So is how do we make a clear decision making for different scopes of problems, right? Think of it like if somebody wants to change, how a networking message being propagated, that is a very local scope for a protocol development or even one client development, right? And then the group that is responsible for that is able to handle it. If somebody wants to change how apps and wallets interact, right, that's already a way bigger scope. It touches a lot of application developers and wallets, and that should be a wider discussion that contributes kind of from both sides. And now if somebody wants, for example, to suggest a different token economics for Near, that actually touches the whole ecosystem and should be surfaced to kind of everyone and take input, have economists, have governance kind of participating in that. And that's kind of at different scopes. There needs to be a clear who and how the decisions are made and what is the escalation path. And so that is, like, I believe probably one of the most important pieces in this kind of decentralized governance that we're building. And obviously, like with that, there's now a lot more opportunities to participate, right? There's so much ways for people to kind of contribute when there's a clear place where they can plug in and kind of push for the thing they think is true or is needed because they're building something else. And at the end, and this is kind of my message to everyone, as an ecosystem, we all are accountable and responsible for kind of all these aspects, right? And so although it's easy to kind of say, oh, those guys are doing this and they're kind of not doing it right or etc., at the end, it's like it is about all of us working together, right? And so the way to have a clear accountability system a way to clearly resolve conflicts and kind of communicate feedback that's constructive, that's not, chaotic or toxic, is extremely important piece. And so all of those things, like why we're trying to evolve the governance, why we're taking time to build a system out of this. So kind of to summarize, goals are increase transparency, operationalize decision-making. We want checks and balances, right? There's developers who are building protocol. There are stakeholders who have Near. There are people who are running hubs. There are folks who are, building wallets, people who are building applications, integrations and partners across the ecosystem, right? A lot of different stakeholders. How do we make sure all of them are counted and at the same time, none of them have a overexert power? We want a kind of on-chain participation, right? Right now, a lot of the conversations are happening off-chain. It's governance forum, it's Telegram, it's Discord, right? Like there is no sometimes way to make a decision when there's actually just kind of a rough consensus of just like chatting on some kind of forum. So how do we synthesize the decision at the end and kind of get a clear picture that everybody agrees with it? Of course, the big part of it is continuing growing the ecosystem. And I think that's, at the end, what we're trying to do is to not just kind of continue momentum, but actually accelerate both funding of the important pieces, ability to also bring back the value that has been invested in the ecosystem back to treasury and continue kind of pushing this ecosystem forward. Ideally, this, as this ecosystem expands, the treasury actually is more valuable, not less, as it kind of invests and funds different opportunities. And so through this, we want to introduce the constitution, right? The kind of the core piece that, everybody is looking for in a way that it defines the governance, it defines how decisions are made, and more importantly, it defines how it can be updated, right? As a developer, the first thing you want to do is figure out how you're going to be updating software, right? As a protocol developers, we have a protocol upgrade process. As smart contract developers, we have a smart contract upgrade process. And this is why on Near, actually, both of those things are made very, very much easier than on any other blockchain, because those are important parts. How do we continue pushing things forward? So I'll just show this again, just kind of to show clearly what is the scope of the ecosystem, right? This is all kind of different parties and kind of stakeholders, and I mean, this does not include everyone, obviously, that are participating, that are kind of pushing forward the ecosystem, right? This is regional hubs, like across the whole world, and we're expanding, and there's been a few announced this week, and more are coming. This is funding nodes. Again, Kairos was announced, there's more coming, dedicated for specific verticals or covering all of the kind of Near ecosystem. We have a number of kind of infrastructure players, right, like Aurora, like Pagoda, like Flux, like a bunch of others that are really pushing the envelope on how to provide the infrastructure and ecosystem. And obviously the applications, the people who are actually connecting directly to the user. So I want to pass this to Blaze, who have been stewarding this NDC process, who kind of took the leadership position to push it forward, to organize, and he'll kind of give us an update where we are and how you can kind of connect with us and participate.
All right. Hey, appreciate it, Ilya, and thank you, everyone. Glad to be here. For you, those that don't know me, I've been in the ecosystem since before mainnet. Been involved in many projects, initiatives throughout the ecosystem. So I felt like it was a good thing to step up on this initiative and really take the step forward to help lead it in terms of stewarding it. Also, I think it's one of the most progressive things, the most progressive ideologies that's going to happen in our time. So this is a big initiative that for anyone that's going to dedicate themselves to it, it's going to require commitment, and there's certainly a lot of work ahead of us to make this actually real. Let's see here on this one. Yeah. Okay. All right, so we talked about Ilya cast a vision for this, right? So the vision was at ECC of what this was going to be. So now we're taking that vision and we're moving it into strategy that will then move into execution, right? So there's a lot to do with that. So In terms of establishing a framework that's ecosystem-wide, we need a constitution, a legal framework, community engagement guidelines, governance framework and processes, and we need a technical governance development plan. So each one of those has been broken into a work group, and so we've got community members that have stepped forward to help with those groups and started the process of identifying milestones, timelines, and elaborating on what each of these actually means. So I would say that, you know, one of the things that's interesting is that it's going to be a process that we go through to identify this, but we also want to move at a pace where it makes sense and we don't get lost in analysis paralysis, and we can actually make movement forward sooner than later. So progress is key here. In terms of the legal framework, we're looking at setting up that for the Treasury. So on the Treasury, we're looking at, you know, how do we move those funds into the Treasury? What's the management processes around that? How do we submit budgets to that and then make sure that those are fulfilled and that people are actually executing on what they say they're doing? So I'm just giving a little bit more detail on each one of these. Community engagement guidelines, right? What's it mean to be a member of this community, right? If there's a dispute, what process do we have to go through? So there's a lot of things. The code of conduct is in there. This community work group has already formulated a lot of these documents, so we'll be putting those up through the process and putting those forward. On the governance framework and processes, so now we've got a constitution, we've got a legal framework, we've got some community guidelines. How do we implement this on-chain in reality so that there's traceability, visibility, a lot of those things? So that's what we'd be working through there. And then the technical governance plan, similar, that's the implementation of our governance framework. But okay. So where do we stand today? So on August 26, a call for participation went out. So there was a call of over 50 plus ecosystem partners, developers, founders, involved community members that came in there and joined a call. And the call was this: let's activate this for the community. The community's been requesting for quite some time additional self-government, governance, management of their own treasury. So that's where the call to action went out. We quickly then turned around and formed work groups from that call. So within 24 hours, we had a Discord, a Telegram with hundreds of members in it. So there was a lot of engagement from the community to step forward and help with this process. Next, we drafted a manifesto. So what's it mean to be, what's our manifesto for this community and for this vision? That has been posted on the governance forum. All of these documents are out there for you to review. Then we moved on to the preamble. What's actually the vision of this? Because as we were moving into this, a lot of folks are saying, well, I don't quite understand it. So you can look at the preamble, and it gives you an idea of actually what we're trying to accomplish. We submitted a grant proposal in draft form. By the way, all of these are community initiatives, so you can go out there, provide your feedback on the governance forum, and we can interact to iterate on these to make sure that we've got the right model for the entire ecosystem. So that was placed forward to request the initial treasury transfer to the community, as well as kind of the guidelines for what needed to take place before funds would be released. So that's out there for your review. So we're looking at a proposed structure for the legal framework, a Gerstenary trust. So with that instrument, we've got to identify who the trustees will be, like I mentioned before, and the processes around that. So that's another work group on the legal framework that's taking place. Where are we going now? So what we've been doing here at NEARCON, so there was a work group session where we brought together all the folks that said, hey, I'm interested in Discord, Telegram on the governance forum that we're at NEARCON. And we did a working session to break those folks up into groups so that they could do more gelling and really begin to talk amongst one another with what their specific work group was going to accomplish. That way we can get to real milestones and timelines. And that's really what we're working to identify now. Also, we're looking at the manifesto, the preamble, and the grant request to get those finalized. So we welcome your feedback on the governance forum to review those, put your thoughts in, your comments. If you see something that you think's missing or needs added or amended, this is the time to participate. Next, what we'll be working on is drafting the Constitution. So that's already started in draft form. We've taken the leads of that group, put them together. So we've began to ideate on what that's actually going to be. We've asked, what's the questions that this Constitution is meant to answer? So when it is completed, we actually know it's finished. So we're planning to have a draft of that within the next week to week and a half for the community review. It's an iterative process. It will by no means be complete initially, but we want to get something out there so that it's in the minds of the community of what we're trying to do. We'll then also work on the governance framework. That work group is already working on this. What does it mean? How do we vote? What are the terms? How do we, have houses that vote against, things? What's the veto power? There's a lot that has to go into that governance framework to actually make this executable on chain. And then finally, we'll review and finalize all of those community documents and get those out there for the community to review and process. Then we'll move on to the governance framework. That's really going to be, how do we make decisions on chain? What does visibility mean? Is visibility actually truth, right, and transparency? So we need to define some of those things. We'll work through that process and get that implemented. And then we'll have the instrument, get the trustees appointed, request the foundation. Once we have these precursors in place, request them to actually transfer the funds to the Treasury, and then we'll begin the process of elaborating on this further. So what do we need? We need you, the community, right? It's a call for action. We need everyone that has a role to participate in the community to join this initiative, join this effort, define our future on how we want to do governance, treasury management, community guidelines, all these things from a community perspective. So help the mission, help us decentralize the future. That's what the whole goal is here. To decentralize, the ecosystem in terms of sustainability, development, and funding and all those things of that nature. So we need your help. Please consider joining us. And so you can hop on the Twitter here or the Discord and join in with us. So would really appreciate your contribution. Thank you.
Thank you, Blaise. Yeah, I mean, in final words, this is a huge effort, right? This is something that, the comparison of this is forming of like country's government that is able to continuously evolve and continuously support its citizens and its ecosystem. And so for us, I think as an ecosystem, it's important to both take lessons from what's already happened and also use the tools that we have now with blockchain, with technologies we built to truly have something that is efficient, transparent, kind of as least bureaucratic as possible and least political as possible, while continue kind of supporting this ecosystem. Near is probably one of the most decentralized ecosystems out there. We've kind of went through a number of efforts to continue decentralizing, continue evolving this. And so with that, we need kind of support of everyone to coordinate this and to make it truly work and be one kind of greatest place for everyone to build and to use Web3. So I want to thank everyone for coming, and please enjoy the video about the NEARCON as a wrap-up.
All right, we're right near the end. What a few days it's been, right? I hope whether you're a builder, a creative, or maybe you're just an enthusiast, whether you're building a company yourself, whatever it is that brought you here, I hope you've had a great few days. I know I've had an amazing few days hearing all the different talks, seeing everyone building at the hackathon, seeing the various panels. It's been a wild ride. So before we wrap this up, we have a bit of a reflection over the last few days, and we'd love to, show you everyone in action. So roll the tape.
Well, thank you. This has been absolutely amazing. 2 days, thrilling. 3 days.
3 days.
Little story, because I think we're waiting for slides to come up. But before the event, it was actually a lot of work, and it was a lot of stress. And I thought, I'm really looking forward to the event being over. And now that it's over, I'm actually sad. So yeah, I just wanted to share that. Now we have the slides, so we can go into it. You start.
Well, so first of all, I want to thank everyone on Near team, on Amplify team, on everyone else who worked on this event. This has been probably like one of the biggest crypto events out there, and it's been, from what I've heard in the audience, and the most amazing one for sure.
Woo! I think what has been absolutely fantastic to see, and I've heard that over and over from people being here, is the diversity and inclusion. And I think we need to keep that at heart. We need to stay truly global and to have fair representation of women. So thank you for that.
I think you've all been walking around, you've all seen these amazing projects and teams that are contributing to the ecosystem and have been sponsoring. So I want to thank them again to be here, to present their work, to sponsor this, to get this off the ground. And yeah, I mean, like I don't even know how to shout out for this, because it's obviously a huge work for everyone to come here, to set up everything, to be at the booth. But it's also amazing to showcase your work, to connect directly to other builders, and to truly have this community feel that we end up building here.
And thank you also to our media partners who've been here, who've actually been shouting about your stories that are coming through. There's been a ton of coverage, again, across the world, not only here. So thank you in particular to CoinDesk for being here and supporting us, and to the rest of the media partners. Now, talking about news, we've had quite a few big news, right? So let's go through the headlines of what we've seen come through.
Yeah, I don't know if you've been keeping up with news, because it's super busy, but we have announced a Kairos Ventures launch, which is a 100 million fund, which is specifically focused on sports and entertainment, with Nathan, who is somewhere here. And it's been amazing, because this is something that will continue pushing the envelope of integrating with real users, with real people who are fans of sport, who are kind of interactive with entertainment, and get kind of us, like obviously like pretty much every single big league is like a billion user kind of ecosystem, right? So like connecting with them, connecting with movies industry, etc., is how we get in front of this, and how we get to this billion user goal that is still there. Obviously, we also continue putting the rails, right? Continue integrating into the kind of global crypto ecosystem, and so we've announced USDT integration that's just coming on Near, making sure that it's easier kind of to move liquidity around, you know, so it's not staying in one place and it doesn't drop from the roof.
More has been coming. You've just heard that from the presentation before, but continuing to decentralize in the right way is absolutely critical. We're super happy to see that the working group is starting to come through and form around that. Not only that, but sharding is absolutely mind-blowing, and that has been done without any disruption to any user or any developer. So the merge, we are waiting for you. We are ahead.
And beyond that, I've mentioned regional hubs, right? I've mentioned a few times because this is kind of core to our belief, core to our way we believe kind of the world is evolving, is being local in different ecosystems. And it's also developing markets. And we've announced here that we're setting up one in India and one in Vietnam, which have been operating and actually is here. They're present here. They have a booth. So, I mean, I want to give a huge shout out to all regional hubs, to be clear, for supporting, for building, for attracting people, for making this possible.
So, we wanted to do something to shout out for the women who are not only building on Near, but just building in Web3 in general. And so this year was the first inaugural year of our Women in Web3 list. We had over 170 women that have been put forward, and then 10 of those amazing women have been actually voted by the community to be showcased as role model. Again, I think this is hugely important as an initiative. We're just getting started, but congratulations to all the winners.
And we cannot not talk about Sweatcoin because this has happened yesterday. The Sweatcoin, which is 120 million users installs with a 13.7 million accounts on Near, have launched their token generation event. They already have 2 million active users already. They have their app, their separate wallet app that had 0 installs, already been trending across multiple regions. And so we already have like 200,000 users already staked their sweat. So we just
this is huge.
This is amazing. Yes.
Bravo.
And if you see a person with with gray hair because of all the stress for the past few weeks, this is Oleg.
Yeah, yes. And sleep. I'm hearing. Anyway, thank you. This is a huge moment for us, and we're super proud to be partnering with Sweatcoin and getting the world not only to walk, but also to earn crypto.
So at the same time, we had a hackathon. If you have not seen them, I don't know what they were doing. There was a huge kind of group of people just hacking on this. People did not sleep. And we had 98 submissions. To be clear, that beat our expectations, I think, by 3. And so, 500 active participants, people being, creating amazing projects. And we were just judging and kind of evaluating top 10. But one we wanted to highlight specifically is Pomegranate, because they delivered a project that both hits, simplicity of usage, sustainability, and kind of on the goal of like creating a direct connection between creators and users. They have a Chrome extension that if you install it and the website integrates one line of piece of code, you actually can pretty much replace ads with a subscription model, and you're paying directly to a creator for interacting with their website. This is amazing. I hope they launch this on mainnet and we can start getting people to use this.
So Sam, wherever you are, congratulations for winning the hackathon. Okay, so if there is a thing that we hope you're taking away from these 3 days is without limits. We hope that actually with Near you can see that you have what you need to create without limits, and that you can actually realize the dreams and the visions that you have for your project, but also for society. Because with Near you can build without limits, whatever actually coding language you use as a developer. You can scale without limits because sharding, we've done that and we're going to continue doing that. You can explore without limits, because whatever you are and wherever you are, you have flexible account models. So let's continue to create without limits, to build beyond the hype, and to get to 1 billion users. Thank you.
All right, thank you, everyone. And please enjoy closing party.